All right, everyone. So we're going to go ahead and get started. We've got the whiteboard, we've got the screen share, we've got the full camera view here. In today's class, I'm going to teach you how to start day trading, and I'm going to break it down for you into 9 simple steps that you can implement in your trading today. Now, trading doesn't have to be as complicated as many people make it out to be. So my goal for this class is that I'm able to break it down to the bare bone things that you need to know in order to start your journey with confidence and consistency. Now, this is a special class because I'm actually doing it as a live broadcast. So thank you guys who are tuning in live. I'm looking forward to reading your comments. Those of you guys who are watching this later after the fact, you're of course welcome to be tuning in. I think you'll really enjoy this class. I wanted to do something special here because what you may not know is that right now we're celebrating my 10-year anniversary of when I first taught day trading, the Warrior Pro course, my day trading course. So it's called Day Trading Strategies and Scaling. And what I'm going to teach you here today, in a lot of ways, is a Cliff Notes version of this class, or at least sort of the high level. My full length curriculum is over 100 hours long, so there's no way that I could teach all of that here today, of course, on YouTube. But I'm going to give you what I hope is going to be a really great starting point so you can begin trading today with confidence. And for those of you who've been trading for a while, if you've been trading for a while, you probably already know what it's like to struggle. You've had some ups and downs, and hopefully this gets you started on the right path. So I'm going to break it into 2 parts. Part 1 of learning how to day trade is learning the basic required knowledge. Part 2 is learning to develop or adopt a trading strategy. Now, when I'm talking about basic knowledge, what I'm really talking about essentially is I want to make sure that you understand the dynamics of the market, that you understand the basic things of how to execute orders, how to get in, how to get out. These, for me, lay the foundation of success as a trader. And if you don't have that, you don't have anything you can build on. So I'm going to begin by breaking down what I think are the 4 most critical components of the general knowledge category. Then we're going to get into part 2, which is the development or adoption of a trading strategy. And naturally, I'll be sharing with you the strategy that I've been trading now every day for more than a decade, full time. So this is a strategy that works really well for me. And ultimately, when it comes to trading, you really have a choice of essentially 3 types of day trading strategies. And really, I can narrow them down to 2. So the first is trading with the trend, which means you look for something that is trending and you look to jump on that trend. You could do this with Bitcoin, you could do it with futures, you could do it with Forex pairs, you could do it with stocks, you could do it with indices. You want to look for something that's moving, generally up. You want to buy and ride that momentum higher. It's really as simple as that. That's called trend-based trading. So with trend-based trading, we're riding the trend. All right, so this is the first day trading strategy. And the second is counter trend. So counter trend means you're not going to ride the momentum. You're going to wait for the trend to reverse, and you're going to take that reversal. And this can be in the context of something declining for the reversal back up. It could be in the context of something going up for the reversal back down. Either way is fine, but this would, of course, be counter trend trading. So in my career, I have always been a trend trader. I have tried both, but I ended up really being more comfortable as a trend-based trader. And I'll talk about that decision a little bit more in today's class. So we'll go through part 1, 4 steps. We'll go through part 2 in 5 steps, which will be 9 steps total. And then I'll share with you some steps you can take to continue learning. My video is sort of covering this right now, so I'll just hide it for a moment. I'm going to give you some recommended reading. I'm also going to give you guys a link. For those of you who are watching this weeks or months down the road, I'll give you a link to a 2-week trial at Warrior Trading if you're interested. And for those of you who are tuning in today, we have our anniversary sale, which will be ending in about 48 hours. So that coupon code is still active and you'd be welcome to use that. Okay, so let's go ahead and jump in with step 1 of the basic required knowledge. Step 1 is setting up your trading station. Now, a trading station can be very simple or it can be very complex. It's really whatever you want. You can tell this is a picture of a fairly complex trading station. And as you look at my trading station here on the broadcast, you probably also would think that this is a little bit more complex. But for me, my trading station has always began with just a simple laptop computer. Now, the reason I used laptops instead of desktop computers early on was just due to accessibility. I had a laptop. I had a friend's laptop that I was able to borrow, and that's what I used to start my career. But the fact is, as a trader, you could do this from anywhere in the world. So why, lock yourself down with a giant 75-pound desktop trading station when you could just as easily do it with this? And then whenever you're traveling, which I travel quite a bit, this is what I do. I've got my backpack right here. I slip the laptop into the back, and right next to it is a USB monitor. This USB monitor, and I don't have any affiliate links here, so use it if you want, don't use it if you don't. It really doesn't matter to me. But this is a Asus USB monitor. This one is dated 2018, so it's several years old. I've been using it for a long time, totally happy with it. And I bring 2 of these with me whenever I travel. So that, along with my laptop charger, is the extent of my trading station. Now, just as an anecdote, let's see, maybe 6 weeks ago, I was in the Caribbean and I had forgotten my laptop charger, which was very disappointing. But I forgot my laptop charger. I got down there to the Caribbean, and the laptop that I was using, it wasn't actually this one, it was this one right here. And this requires a very specific charger. And I couldn't find that charger anywhere on the island. And I was like, shoot, what am I going to do? The market was really hot. So this is what I did. I went to a computer store. I bought a cheap laptop for $1,000. And over the next 5 days, I made about $60,000 using this laptop. So the laptop is just a tool, right? You can really use any laptop for the most part. You don't have to use a super fancy laptop. It can be a $1,000 laptop, maybe a little bit less. And $1,000 is not nothing. It's not the cheapest laptops ever, but you can go pretty basic with your trading station. The way I break mine down, and I'll kind of draw it out for you, because I think that'll be easier for you to see, is I've got my laptop right here. So this is my laptop. And on my laptop, these are the keys. So on my laptop, I have my broker right here. And this is where I have the buy and the sell buttons. So I like to have this right on my front laptop screen because it's right in front of me. This is critical for me. On my second monitor, which is going to be right over here, and on my other monitor, which will be right over here. These are my USB monitors. And I can either lean them against a flower pot or a vase in the hotel room, or I can connect them with these little clips that they make. They have clips so you can connect it. On this one, I have my stock scanners, which is giving me a list of all the stocks that are currently moving up. And I'll just show you on my main screen here what that looks like. So I have, let's see, where is it? Oh, it's right here. So these are my stock scanners that I have on the left, and then I have charts on the right. So that's what this monitor looks like right here. I've got charts right here. I've got scanners on the other side. And then this monitor right here, these are more charts, stocks that are moving around. And that for me is the extent of my entire trading system, my trading station. So, $1,000 laptop sort of, at a minimum is decent. Although I got started with a $150 laptop. And then a couple of these monitors, whatever, they're $100 or something each. So more or less, you're all in at about, $1,200, maybe a little bit more, depending on how big you want to go. All right. So this is just the basis, of my trading station that I use for traveling. I really do think it's adequate. You're welcome to use more if you feel like you need more, but if you want to use something a little bit simpler because you're just getting started, that's okay too. All right, so let's jump out of this. So step one is setting up your trading station. And to give you a little bit of context here into where we're going, this is a roadmap of 9 steps to get you ready for day trading. This is not, this is for people who are really ready to take the leap and start trading. So you could say, oh, I don't need a trading station yet because I'm just watching videos on my phone on YouTube and learning about trading. And that's totally fine. If you're at that place in your learning curve, you don't need to get into the trading station yet. You can just sort of focus on, gaining more of this general knowledge. But nonetheless, you will probably at some point, if you're going to make a go of it, you're going to need to get a trading station, because the fact is, although it's true that the market has never been more accessible, that you can access it from your phone, I don't know. None of my students who have made over $1 million, none of my successful traders that are in our community are trading on their phones. So if you want to take this seriously, if you really want to make a career out of this, you have to have at least a basic trading station, some basic equipment. And so this is what I would recommend as a starting point. Okay. And by the way, for those of you guys tuning in, I see Long Biased Bananas in the chat feed. Let's see. Hello, Tobias. He's in the chat feed. Albert. Hey, Albert. Good to see you. Dave, Rocky, Sear. Let's see. Travis, Matt. Hey, guys. Welcome. So thank you guys for tuning in. Throw questions out there. I will stop. What my plan as we go through these 9 steps is that after each step, I'll pause for a moment and see if there's any questions. So if you have any questions related to the trading station, please feel free to throw those out right now. Okay. So, and at one point, for what it's worth, I had 12 external monitors. So I had a really huge trading station, and it's not necessary. You will not make exponentially more money the more monitors you add. It's just not like that. So I would focus on keeping it simple to start. Don't overwhelm yourself. Don't spend a ton of money. Right now, for a lot of you, it's about proof of concept. Can you even, make this work and find some degree of consistency? And if you can, then you can lean in and push a little harder. Okay. So it doesn't look like there's any specific questions related to the trading station. So we're going to continue on with step 2, general knowledge of how to buy and how to sell. Okay. So when it comes to buying and selling securities, stocks, equities specifically, there are really 2 ways to do it. One way is to use buttons. So when you're using buttons, you have a button on your screen right here as part of the trading platform that you're using. So I'll just let's see if I can get this going. Sorry, I just want to get my drawing tool. So you've got a buy button right here. You've got a sell button right here. You see these? And you've got a buy button right here for 1,000 shares. You got a sell button right here. So these are your sort of standard buttons that a lot of people will set up on their platform. They're hot buttons, and you can either use hotkeys, hot buttons, or you can manually enter your orders. Now, when we're trading in the market opens at 4 a.m. Eastern Standard Time. So we'll start writing this out. 4 a.m. is pre-market. 9:30 a.m. is the opening bell. 4 p.m. is the closing bell. 8 p.m. is when after hours ends. So this is after hours. This is pre-market. And then this right here is regular trading. Now, the reason I bring it up is because depending on the time you're trading, you may have to change the type of order that you're using. So if you want to buy a stock and it's trading at, we could just use one of these stocks as an example. Let's say you want to buy ACB right here. This is Aurora Cannabis. So you want to buy this stock. All right, that's just fine. So you can see it's currently trading at 1720 by 1724. The way stocks trade is they're always trading with a spread. They have the best buyer and then the lowest price seller. And when someone says, oh, ACB is at $17.23 and they're just saying one price, they're generally referring to the last price that went through, the last price that was traded, which is fine, $17.23. But in fact, all stocks trade with a spread. This example is a stock trading at 225 by 226, which is a spread of only 1 penny. That's obviously a very tight spread. This one's a little bit bigger. So if you want to buy this type of stock right here, what we would typically do is we would say, all right, I want to buy 1,000 shares, and I want to buy at the offer right here at 17.24. If you buy right here at 17.24, it'll be basically an instantaneous order because there are people selling shares at 17.24. That's the price they're asking. That's why they call this the ask. This is the ask. This is the bid. So people are asking 17.24. You can buy immediately from that seller. You can get filled instantaneously. And we would call this a marketable order because you're getting filled at essentially market price. Now, market prices move and fluctuate quickly during the day, but this would be an entry basically at market price. Now, if you want to get out, you're holding shares you want to sell, you could sell immediately to one of these buyers right here at 17.20. There are people lined up, they want to buy, and you could go ahead and sell them shares and you're out of the position. However, sometimes people will say, well, there's a little bit of a problem with doing all this. And the problem is that if I sell at 17.20, I'm not really getting the best price because I might prefer instead to sell at 17.24 and get that extra 4 cents a share. Now, it's only 4 cents. It doesn't really seem like a lot, but if you have 1,000 shares, that's $40. All right. So you could choose to put an order at 17.24 and join all these other sellers at the same price and wait for a buyer to come along and buy your shares. When I'm trading, this is my philosophy. If I see something that's moving, I want to get in basically immediately. I don't want to sit and wait. So what I'm going to do is I'm going to go ahead and buy from someone who's selling right now. And I can set up this button right here to buy 1,000 shares. And the way it's been set up, the way it's been programmed is that that buy button is automatically going to buy at whatever this current market price is. So we actually have something called a market order. A market order to buy will get you in at the, hey, let me know if that reconnected for you, if you guys can still see me. Hopefully you can. It says it reconnected. Okay, so if you do a market buy order, you're going to buy at 17.24. If you do a market sell order, you're going to sell at $17.20. So a market order is going to get you in and out instantaneously, but it's not going to be at the best price. You'll lose a little bit of money versus if you sat and were patient and waited. However, while most people like using market orders because you can instantly get in, you can instantly get out, it's very quick, there's a problem. You cannot do market orders pre-market and you cannot do them after hours. You can only do a market order during regular trading hours. So we'll just do MRK for market order. So the rest of the time, you can use a limit order. Limit orders you can use at any time of the day. And so what most active traders use, who are actively trading pre-market or after hours, in addition to regular trading hours, is they change the way they buy from using market orders to using limit orders. So with a market order, you're telling your broker, you're saying, hey, Thinkorswim, whatever broker you're using, hey, I want to get in this and I'm happy to get in just at market price. So just get me my shares and they'll get you your shares. With a limit order, what you're doing is you're telling the broker the most you're willing to pay. And so what I've done is I've automatically scripted these buttons to say, I want to buy shares and the most I'm willing to pay is 10 cents higher than the current offer. And what we actually do is we can go into the custom orders here, and these are 3 different platforms. This is platform number 1, this is platform number 2, and this is platform number 3. This one on the far side is Thinkorswim. And what you could do is you could go into the custom orders and you could say, I want to buy this number of shares and I want to buy on the ask plus X number of cents. So ask plus 5 cents, ask plus 10 cents, etc. And when you do that, you essentially have an order that functions as a market order, but it does have a limit on it. It's not a complete blank check for your broker to fill at any price. The reason that we have these rules around market orders is because pre-market and after hours, there's not a lot of trading volume. So if you press the buy button with a market order to buy 100,000 shares, let's say you meant to buy 1,000, but you just kept typing 0, you click send, then all of a sudden your broker, once you send the order, you can't cancel it. So now they're buying 100,000 shares, and because there's not a lot of people buying and selling during these times of day, they're going to have to pay a much higher price to find your shares. And so to prevent you getting completely screwed on a position like that, they just say no market orders pre-market, no market orders after hours. So that means pre-market and after hours, you have to use limit. And during regular hours, you could use either one. But for me, I just use limit across the board because instead of having different hotkeys that I use at different times of the day, I just don't use market. I only use limit orders. Okay, so I wanted to help you better understand order types. So when we're buying and selling, what you'll see right here is time in force day on this platform. So this time in force being a day order means in this platform, it'll work at any time during the day. It's not just a regular trading hours order. It's an order that'll function pre-market and after hours. Some platforms call it day plus. And other platforms specifically show you pre-market, after hours, regular trading hours. But regardless, when I want to buy a stock, I look at the level 2. This right here is called level 2. It's the depth of the market. It's showing us all of the quotes, all of the buyers and all of the sellers. I check the spread. In this case, it's a 4-cent spread. And if the stock is moving and it fits my strategy to buy it, I'm going to go ahead and I'm going to punch the buy button and I'm going to get filled at 17.24. Now, because I have a 5 to 10 cent offset above the offer, it's possible I could get filled some shares at 17.25, but I will not fill any shares at 17.90. So if it jumps right to 17.90, with a market order, you would be filling those shares, but not with a limit order because you've set your limit at 17.29 or 17.34, depending on whether you used 5 or 10 cent offsets. Now, for a lot of beginner traders, even understanding level 1 is kind of a new concept. So let's see. Let's zoom in on this a little bit here. So this first row right here is your first depth of the market. This is showing you your best buyer and your best seller. All right, so we're going to erase this. And I'm going to draw this out. As I do it, hopefully, let's see. So I'm actually going to use this marker. So level 1 data shows you the bid, the ask, or the offer. And typically, it'll also tell you the high of day, the low of day, and the last price that went through, the last trade that went through. And you also see typically the volume, the total number of shares traded on the day. So this is level 1 data right here. Okay. So when we're looking at the price, we'll see this is 1720 by 1724. These are the prices, and we will see a couple more pieces of information. We'll see NASDAQ and BATS right here. These are the actual routes. These are the financial exchanges that people are sending their order through, NASDAQ and BATS. And you'll see a couple others on this side. And then you'll see these numbers which reflect the number of shares that someone's trying to buy or sell. Okay. So we'll see the market maker /ECN. This is the route that the trades are going through. And then we'll see the number of shares that someone wants to buy or sell. And we'll see the same thing on both the bid and the offer. This is level 1. This is the first depth of the market. Level 2 is when we start seeing 1719, 1715, 1710, 1705. And you see going up 1729, 1734, 1745, 1750. And let's just say maybe at 1750 we see someone is selling 100,000 shares. Now, if you were only looking at level 1 market depth, level 1 market data, you wouldn't see this 100,000 share seller. You would just see 1720 by 1724. And if you liked the stock for reasons that we'll explain later in this class, you might go ahead and buy it. And that would be a problem because you wouldn't realize that there's a huge seller and they're not very far away. So by using level 2, the depth of the market, you can better see and you'll be able to visualize where we may have areas of resistance, which is formed when we have large sellers. You could also see where we might have areas of support, which could be formed by large buyers. Okay, so let's see. So I'm going to clear those drawings. Now, if anyone has questions on level 1, level 2, hotkeys or hot buttons, please feel free to put them in the chat feed now. I'm going to keep talking about this for another moment, but just feel free to put the questions in now while I'm still on the topic. So for me, when I'm trading, I look at level 2 right here as sort of being the road in front of me. This helps me visualize what's coming. Because when we're looking at a candlestick chart, we're looking at a stock chart, the problem with a stock chart, now I love stock charts, but one of the problems with a stock chart is that it's actually only giving us historical information. It's telling us what's already happened. This is all things that have happened. What we have to do is then make a prediction based on a chart pattern that we see here of what is going to happen next, right? So we make a prediction that based on this is going to happen next. But the fact is, charts are not going to show us those orders. So the orders will be displayed on the level 2. So level 2 and candlestick charts really go hand in hand. So there's a question there about the coloring of the depth of market here. So this is colored right here based on the tiers. Sorry. Let me just go down here. Okay, so this is colored based on the tiers. So right here we've got 1720. These prices, 1720, they're both the same price, so they're green. The closest to the market is green. These are all 1724, so they're in green. The next price out is red, 1725. The next one's yellow. The next one's blue. So you could choose any colors you want. You just want to make sure you're consistent and you're able to remember the choices that you made. For me, this is an important way to visualize level 2 because what some brokers do is they just have a gradient where it just goes from like light green to dark green or light blue to dark blue or whatever. And I find that to be very difficult to read. I want to visually see if there are more buyers or there are more sellers. In this case, there are more buyers. There are 4 buy orders and there's only 2 sell orders. So when we're trading, ultimately, stocks move up when there's an imbalance between supply and demand. The greater the imbalance, the bigger the move. And just in these little moments here, we can see whether the supply and demand imbalance is towards the buy side or it's towards the sell side. So in this example, the imbalance is on the buy side. In this example, there's an imbalance that's on the sell side. Okay. Now this is constantly fluctuating, it's constantly changing. And this is only just in this very moment. It could change, but it's still helpful to know. And it's much easier to visualize when you change the color of the first tier. Because if you just looked at every order in total, that wouldn't be super helpful because you could have big orders, but they're really far away from the current price. Maybe you have a 1 million share buyer that's at $1 a share. So you'd say, oh, we have more buying demand than, more on the buy side than on the sell side. But it's so far away, it's not really relevant. So for me, I find it really helpful to color my level 2 based on the tiers. So the first tier is green, and then I can very easily see if there's more buyers or there's more sellers. Second tier is red, just has to be contrast. Next one's yellow, next one's blue. That's what's important. So this is the way I color it, and I do find this to be really helpful. Now, there's a question about whether or not using level 2 is necessary for swing trading. And for swing trading, it's not. Because when you're swing trading, you're holding for days and days and days. So your setup is based much less on the very sort of momentary dynamics that you're seeing on these candlestick charts and on the level 2. And it's more on your daily chart pattern and on your perhaps 15-minute, 60-minute time frames. So for that reason, level 2 becomes less important. Good question, though. Thank you for throwing that out there. And when it comes to hotkeys, the way I have my hotkeys set up, and I'll just bring this keyboard over here just so you can see it. So this is just a little keyboard here that I use for one of my computers. Shift 1, Shift 2, Shift 3, 3,000 shares. Now, when I want to get out, I press Control Z. Control Z is my exit button. So I can sell my full position just by pressing these 2 buttons. And this for me really makes it very, very quick. So when I'm trading, I can be moving in and out just by pressing the buttons here. And I actually don't have to be clicking anything with my mouse. That makes it faster. So the more you can streamline your trading, the better. Now, ultimately, as a beginner trader, you need 3 hotkeys. You need 3 buttons. You need buy, sell, and you need cancel orders. That's it. So 1 button to buy, 1 button to sell, and 1 button to cancel an order that maybe you put out that didn't get filled. That's a starting point. So the way I would script those keys is I would say, I'll just erase this here. I would say that your buy button, buy would be ask plus 10 cents. And then you choose your position size. Position could be based on a certain number of shares. It could be based on a percentage of your buying power, however you want to do it. All right. So buy, and then I set this as shift +1. That's the key. I don't want to have, I prefer not to have just 1 button, execute a live order. I'd rather have it be 2 just to reduce the risk of, a cat walking across the keyboard and causing an accident. And then for selling, I do Control +Z. And this is sell, bid, minus 10 cents, full position. The full position, selling the bid minus 10 cents. And then you can either use the escape button or Control +Q, either one you want, either or, for cancel all orders. Now, I do have a Stream Deck, but I use the Stream Deck for, I actually use it for my videos here. So full camera, whiteboard, back to here. I don't like using it for trading. I just don't. I've tried it for trading. And some people, if you want to use it for trading, you certainly can. And then you just click 1 button and it's a buy button. It's a buy order and it's a sell order and a cancel order. So you totally can do that. Some people have even scripted a mouse, like an external mouse, that has commands on it on the button to be like buy, sell, etc. So you could do that. I mean, you could use a gaming device. You could use really whatever you want. It's your choice. But I suppose nonetheless, these are the 3 hotkeys that I would start with: buy, sell, and cancel orders. That's it. Keep it simple. Now, once you've mastered that, then you might say, well, geez, my sell button is just selling on the bid, right? I wanted to make it very simple. So my sell button is selling on the bid right here and just selling the full position. Maybe the next level would be that you say, I'm going to create 1 more order in here, and it's going to be to sell bid minus 10 cents for half position. So you use 50% of your position. That way, instead of selling the whole thing, you're selling half to scale out. And then maybe you make another one for selling quarter position for scaling out even slower. Then maybe on the buy side, you have one that's, for 1,000 shares, one for 2,000 shares, one for 3,000 shares. And those are shift 1, 2, and 3. And then maybe you say, well, sometimes I also want to sell at the ask price here. Now, if I want to sell at the ask price and get the best exit, well, shoot, I'm going to need a whole set of hotkeys, for full, half, quarter positions. instead of at the bid price that are at the ask price and don't have an offset, that are just sitting right at the ask, so I can get the best price. And then next thing you know, you're in a situation like what I'm at, where you've got 15 or 20 or 30 hotkeys. And that's fine. There's nothing wrong with that. But don't go overboard yet. Focus first on setting a foundation with understanding the basics. And I want to note that this class, because we're only on step 2, this class, it's going to be a very comprehensive class. But at the same time, I could spend hours on each one of these steps going into all the nuanced details of exactly how I do it. And of course, I do that in my Warrior Pro curriculum and then some. But for the purpose of this class, I want to keep it high level. So if you think that I'm excluding something or leaving something out, I don't want you to think it's because I don't know about that or because I'm just being absent-minded. It's just for the purpose of keeping things high level. Because I think what can be a good goal is, as a teacher, teaching you the high level concept. And if you're interested and you want to learn more, then I give you the additional learning where you can dive down even deeper. Okay, so right now we're going to start with getting high level layer, top layer of information on each of these 9 concepts, 9 steps, and then we can go deeper if you want to. So by the way, for those of you guys who are tuning in, this is a special live broadcast that I'm doing here today to celebrate that it is our 10-year anniversary of when I taught my very first class, which is called Day Trading Strategies and Scaling. I'll actually pull up my my slide deck for this class right here. So Day Trading Strategies and Scaling, I taught 10 years ago. This is when I taught the first class. And this is now built out. This section is 1,635 slides deep, and I broke it into 2 volumes, part 1 and part 2. So this is now a class that when I teach it live takes about 6 weeks when I'm teaching it, of teaching class every single day, and is over 100 hours of content. So I know many of you already know that, but we're also running a special right now with the anniversary sale. So if you want to come over to warriortrading.com/memberships, there's a link that's pinned in the comments here. It'll be in the description. You can check that out. And for those of you who are watching this episode months, even years down the line, and the anniversary sale has passed, I'm going to put a link for you guys where you can do a 2-week trial at Warrior Trading for $20. Now that $20 helps cover our market data costs, because during your 2 weeks, you'll have access to charts, scanners, news, my live audio video broadcast, plus a curated selection of the classes that go deeper into things that we're covering here today, high level. Okay, so step 2. Step 2 is how to buy and sell. Step 3, we're going to start with giving you a basic understanding of candlestick charts. Again, this class today is broken into really 2 parts. Part 1 is teaching you the basic knowledge. Part 2 is teaching you a strategy. So the basic knowledge is the general stuff that you need to know in order to trade. You need to know how to set up a trading station. You need to know how to buy and sell. And buying and selling includes sort of a high-level breakdown of order types, hotkeys, level 1, level 2. Now we're going to talk about candlestick charts. Candlestick charts are the universal language of the financial markets. Doesn't matter if you're trading cryptocurrency, you're trading futures pairs, you're trading commodities, you're trading stock. Does not matter, because every financial instrument will give you the ability to pull up a chart that's going to look something like this. This is a candlestick chart, and this is what we use as active traders to try to make a prediction about what the price is going to do next. It's as simple as that. Those who are successful at making the right prediction will make money. Those who are not will lose. You already know that the majority of traders out there do lose money, and I think one of the reasons is because most traders fall victim to not following the rules of a strategy and instead trading on impulse and gut. But the thing is, because we have all of this historical data, all of these charts create historical data. So because we have all of this historical data, we can actually start to understand which patterns resolve the best. These are technical patterns. So when we see these patterns and they repeat themselves, and we learn that they have a statistical likelihood of resolving in one direction or another, we can begin to create a strategy around it. And that's how you develop your edge as a trader. Okay, so candlestick charts, and I'm going to put this back up here. For those of you who are very new, As I said, they're the language of the financial market, and they've been around for hundreds of years. And the way a candlestick chart works is each individual candle, as you can see right here, communicates to us 4 pieces of information. This candle is communicating the open, the close, the high, and the low. So the price opened, it dipped down for a moment, it surged up, might have pulled back for a second, we don't know, moved higher, might have pulled back again, hit a high, and then closed right here. Okay, that's the price action that occurred inside this candle. Now, I'm actually going to change my drawing tool here to make it a little bit. All right, so then this is a red candle. A red candle opens high, it hits its peak here, so it opened, it popped up, it then dropped down to the low and then closed right here. Okay, so the difference between a candle that's green and a candle that's red is where the open is. Red candles open high and close low. Now, for some of you, and this may be not many of you, but if there are any of you tuning in here today who struggle with color blindness, you don't have to go with red and green. You can just simply have candles that are hollow or candles that are like white and black. Just you could make a much greater contrast between the two, but you need to know which direction the candle is going. So let me pull up a chart here and I'll just show you what this chart would look like, just for instance. So I'm going to look at this as a chart. This is a stock that I traded a couple weeks ago, had a couple nice trades on it. So we're going to change the color of these candles to make all of them white. Okay, and I'm going to do this here just as an example, just for the fun of it. Okay. So now let's look at this candlestick chart. You can certainly still see in this area, for instance, that the price moved up and then pulled back. I'm going to hide this. The price obviously moved up, pulled back, and then moved higher. If we go back a little bit further, back over here, we could see, the price moved up, pulled back, moved up, pulled back, moved up, pulled back. But with candles just in white, what's hard to, and of course you could see the green volume profile down here, but what's hard to know is really what was happening during this period of pullback. So if you have your candles colored green and red based on the direction they're going, right? Well, now I'm just going to click the undo button and it'll be faster. Let's see. There we go. There we go. Okay. Then you're able to visualize clearly that right in this area, we had sellers. So we had an imbalance to the buy side. There were lots of buyers, and then we switched and we had an imbalance to the sell side. And then we had an imbalance to the buy side as we pushed up, and then an imbalance to the sell side. And during this period of sideways consolidation, it's important to know if the candles are red or green, because it's important to know if people are accumulating to buy a position or if people are selling and they're unloading positions. So this helps us understand really whether people are buying or selling. So you need to have the colors so you can differentiate the buyers and the sellers. Okay, so when we first look at candlestick charts, you first have to understand the individual candlestick pattern. So an individual candlestick, based on its shape, is communicating market sentiment. So let me pull up the whiteboard here. And let's just say, for instance, we had a candle that looks like this. What does that candle tell you? That communicates a lot of strength. What if you had a candle that looked like this? Well, that communicates more indecision. The price went up, it went down, it kind of closed at the same price. What if you had a candle that looked like this? Or a candle that looked like this? These all communicate different messages to us. This candle is a little bit more bullish because although the price declined, it got bought all the way back up. So the price opened, declined, and then came all the way back up and closed at the high. In this example, the price opened, came all the way up, came all the way down, and closed here. So this one is a little bit more weak. This one's a little bit more positive. This one is a little bit weaker as well because it's showing this indifference. The price is opening and closing at the same price. This is very strong. So the actual shape of the candlestick, and certainly the color, communicates market sentiment. This tells us how strong the stock is. Hey, Nelson, thanks for sending that. Appreciate it. So what we do as active traders is we look at these candlestick charts to try to develop a bias, essentially, of what we think. I don't know, maybe bias isn't the right word. We try to develop a thesis of what we think the price is going to do next. If we think it's going to go up, we think it's going to go down. And so what I've learned is that there are a number of technical indicators and candlestick patterns that help me make the right decisions. So we're going to talk first about a few of the indicators. So technical indicators. So on my charts, I use moving averages. And the moving averages I use are the 9, the 20, and the 200. And these are all exponential moving averages. So the way this works is a moving average takes the average price over the last X number of periods. So the average price over the last 9 periods, if you have a chart where the price has gone up very quickly, like this, then your 9 moving average, the average price over these last 9 candles, is going to move up very quickly as well. It's always going to be a little bit below the price because it's trailing behind. You know, the average is not up here. The average is these last 9 candles, you know, plus more that would have been back here. So the average drags behind a little bit. So I use the 9 exponential moving average, and I actually use it in a gray color. I use the 20 in blue down here. And I use the 200 in sort of a magenta color. Let's see, way down here. So we'll just say magenta. Okay. Now, the reason I use these moving averages is because when I'm watching the price move up, the more extended the price is versus these moving averages, this helps me understand my risk. Because generally what happens is when the price pulls back, the price will pull back to the 9 moving average. Now you might say, why does it do that? And I would answer your question with a question. Why is it that people stop when the traffic light is red? They stop because they know that that's what it means. And because this is a universal language, people have learned that when you have a stock that's moving higher and it has its first pullback, it comes down to the 9 exponential moving average. And if it breaks that level, your next level of support is the 20. If it breaks that level, your next level of support usually, well, the 200's a little ways away. The next level would be your volume weighted average price. And the VWAP I have in a dotted orange line. So the volume weighted average price is like a moving average. It's an average price, but it weights the volume in as it creates the average. So it actually figures out, for instance, let's say this stock had a ton of volume on this candle and almost no volume up here. The weighted average would be way down here. It would be low. And on the flip side, if it had no volume here, the volume weighted average price would move up very quickly and it could be way up here like that. This is actually telling us the average price of the stock based on how many shares traded. So this is super important because the volume weighted average price, being that it tells us the average price of the stock over the course of the day, if the price is above it, the bulls are in control. If the price is below it, the bears are in control. So this, whether the price is above or below, is telling us bullish or bearish on the stock very clearly. So I'm going to use volume weighted average price. I'm going to use the 9, the 20, and the 200 period moving averages. I'm of course going to use volume bars. So my volume bars are going to be colored based on whether the price went up or down. And I'm going to use MACD. MACD is an oscillating indicator that stands for moving average convergence divergence, MACD. So what this means is when you're moving averages, 9, 20, 200, etc., when the moving averages are diverging, let's think about what's happening. So that's your 9, and this is your 20. Why are they diverging like this? They're diverging like this because the price is moving up really quickly. If the price is moving up really fast, it's going to pull the 9 moving average away from the 20. The 20 is going to take longer to move because it's a longer period. So when the moving averages are diverging, they're moving apart, the price is moving quickly. When they're converging, they're starting to come closer together. That usually means the price is coming back and we're coming into a period of pullback. So now we're sort of going sideways, I'll just go like that. We're starting to come back in. So what I have found is the MACD as a technical indicator is really good at helping me identify when I want to be focusing on trading a stock and when I want to just completely leave it alone. All right, so let's go back here for a second. So we're going to go back to this bigger move back in this area. And what you're going to see on the chart down here is the MACD. The MACD right here is diverging, moving apart, and then right here it converges and it even crosses over. And look at the 9 moving average, moving up. The 20 is moving up. VWAP is moving up. And then right here, our 9 and 20 moving average actually do a crossover. The 9 crosses below the 20. So that is a bearish indicator. It's a moving average crossover. This is a technical, something that occurs. It's a technical pattern. And when that moving average crosses over, then for me, this is really not something that I'm going to be interested in any longer. I would be leaving this alone. So the area I want to trade when the MACD is moving up, when the moving averages are moving apart. Once they start converging, they start pulling back together. Usually that's when we find that the price becomes choppy, and that's not when it's going to be easier to trade. So something that's really important to understand is that you can have a stock that's really strong, and there's a time during the day when you should have been trading it, you should be really, really aggressive on it, and then there's the whole rest of the day when you should just leave it alone. It's not even worth trading at all. So I want to focus on trading these on the front side of the move when they're making these really big squeezes, when they're really volatile, and completely leave it alone the rest of the day. Okay, so the technical indicators I'm using on my charts, moving average, VWAP, keeping it simple. I do not want to overcomplicate things. It's important to keep it simple as a trader. I think a lot of beginner traders get caught into making things overcomplicated. And the reason for doing it in many cases is due to a fear of loss. You're trying to find the holy grail combination of technical indicators so you'll never lose. But the reality is that doesn't exist. And so as you keep searching for that, you end up generally getting yourself into this rabbit hole of getting your charts more and more complex with all these indicators, just hoping that you won't have a loss. But that's not realistic. Traders will lose, and I lose too. I lose about 30% of the time, and even in spite of that, I've been able to do really well in my career as a trader. I was first interested in the market during 1997 and 1998 during the dot-com bubble, and I opened my first account in the early 2000s. I've been trading full-time now for more than 10 years, and I have more than $12 million of gross profit to show for it. So if I clear this out, you'll see, we'll go to detailed right here. This is going to show $12.6 million of gross profit. Now, I'm not going to say my results are typical because they're not, but it is important for you to learn and know that the person that's teaching you here today is actually credible and qualified, that actually know what I'm talking about, and that I'm still trading every single day in today's market. So, it's true that there are things that worked 10 years ago that don't work as well now, but I'm still trading. I'm still here every single day, and I can tell you what works in the market today. Okay, so let's see. So what I want to do in this section of step 3 is give you sort of a crash course in candlestick charts, help you understand the indicators I use, including volume down here, which is very simple. It's just the color is based on the candle, and it's the total number of shares that traded during each period. And we're not going to get into all of the different patterns because it would take too long to do that, but I'll talk about some of the patterns in a few minutes when we get into part 2 on timing your entries and exits, your entry indicators. So Now let's go into part 4 of this class, which is on market dynamics. So I think it's very important to have a general understanding of the way the market works. Why do stocks go up? So as a volatility trader and as someone who's trading the trend, I'm trading stocks that are moving up. So I'm never going to buy something that's just sideways, not moving at all. I look for things that are already moving, and I want to get in and I want to ride that momentum to the next level. So why would a stock go up 15, 20, 30, 40, 50% or 100% in one day? Typically, there's some underlying catalyst that's driving the move, that's bringing traders into this stock. So that catalyst could be like a pharmaceutical company that has FDA announcement that some drug they've been working on has been approved. They could have clinical trials that are really good. It could be any company having quarterly earnings, or a small cap company that now has a new contract with like Amazon or Google or Apple or something like that. These can be a big deal. Now, what I've learned in my career is that trying to trade stocks like Apple, Nvidia, Tesla, these high-priced stocks, is they don't really move on an intraday basis enough to give me the profit that I'm looking for. So I have found at a minimum that I'm looking for stocks that have the potential to go up 30 to 40% or more in one single day. Now, that's setting the bar perhaps a little high, but that is what I'm looking for as a trader. So what creates those moves initially? First, news comes out on a stock. So a stock will have breaking news, but breaking news doesn't create a price change. What creates a price change are when actual buyers press the buy button. So people buy because they read the news and they like it. Now, as the price begins to go higher, other traders see that the stock is moving. They check the news, they like it too, and now the price goes even higher. And what's interesting in the market is that the higher the price goes, the more people want it. So there's this dynamic in the market sort of related to fear and greed, supply and demand, and just human behavior, that as prices go up, people get more and more excited about buying these stocks. And we saw this certainly with Tesla during COVID, but we've seen it with thousands of other stocks over the years. So I want you guys to throw in the chat feed here, who are tuned in, what your general process is each day of finding stocks to trade. So you just tell me, what's your process? How do you find stocks to day trade? The way I find stocks to trade each day is I'm using scanners. So let me show you the scanners that I'm using. This is the scanner that I use that searches the market in real time and tells me if a stock is moving higher. And what's important to note about these scanners is that typically it is the top scan result, the top leading percentage gainer, that gets the most attention. So I'm seeing a number of you guys saying scanners, scanners, scanners. Usually it's the number one position. This is like first page of a Google search. And at any time, at any day, you can scan the market and you can see what is the biggest moving stock right now. And typically the biggest moving stock is the one that's going to have the most attention. That's the one that's the all-star for today. And it's also important to note that typically a lot of these commission-free brokers will email out to their newsletter, their, well, probably not thousands, but potentially millions of people, hundreds of thousands, probably millions of people on some of these newsletters. Robinhood, the Robinhood, what do they have? I can't remember what they call their newsletter, but in any case, they send out, hey, these are the hot stocks today. These are the stocks that are moving, because those brokers want you to trade. The more that you trade, the more money they make because of payment for order flow. So they're going to be constantly telling you, hey, check out these stocks. Hey, this company has earnings today. And they're not going to tell you about a stock that's going sideways and is boring and is doing nothing, because no one's going to be interested in that. Let's be real. They're going to be telling you about stocks that are moving. They want you to not just buy once, they want you to actively trade as much as you want. The more you trade, the more money they'll make. And so the result here is that we have a market where traders flock to hot stocks at different times of the year and certainly on any given day. So for me, as an active trader, I'm always trying to ask myself and understand what is the sort of collective sentiment today? What are all the other traders looking at? What is obvious today? And if I can figure out what's obvious, that's the stock that I'm usually going to do the best on. The days that I lose, often it's because I ended up trading a stock that was not obvious. Maybe I thought it was, but at the end of the day, I realized that I had gone off track and it was in fact not the obvious stock to trade. And that resulted in me taking unnecessary losses. Okay, so once you understand the sort of general concept of market dynamics, it's going to help you as we go into part 2 of this class. It's going to help you understand the right type of stocks to trade. Okay, so let's go ahead and jump into step 5. So today, this class is on how to day trade in 9 simple steps. And our first part, which we just completed, was breaking down the basic knowledge that you need in order to start trading in the market. I wanted to make sure you understand how to set up a trading station, how to buy and sell, different order types, hotkeys, level 1, level 2. Then step 3, we talked about candlestick charts, talked about my favorite technical indicators. And step 4, we talked just briefly about market dynamics and the power of fear and greed. Ultimately, it is fear and greed that get traders so excited. The opportunity to make money, greed, the fear of missing out, etc. And now I want to help you understand how to trade in the market. So for me, I have a strategy that I've been trading for more than a decade. Now, this is just one strategy. There's, millions probably of traders out there that have different variations of strategies. But at the beginning of this class, I shared with you the fact that really all strategies fall to your 2 strategies of trading, trend trading or counter trend trading. As you already know, I am a trend trader. I find this to be much easier, and so this is what I'm going to be teaching on today. So all trend traders ultimately would probably be able to relate to some of the things that I'm going to share with you in this class. Even if their strategy is slightly different, they're going to be fairly similar. So step 5, I want to talk about risk management and setting guardrails for yourself. Because we know so many beginner traders fail, it's very important that you're able to do things differently from what all those other people are doing. So I think the first thing that you need to understand is the concept of managing risk. So let's just talk from a statistical point of view here for a second. If your average losers are, let's say, if your average winners are $2 and your average losers are $1, what is your break-even point? These are your average losers, those are your average winners. You would be break-even if you're right, even just 33% of the time. That's your break-even. Now, if your average losers are minus $1, your average winners are plus $1, your break-even naturally is 50%. And over here, if your average losers are $2 and your average winners are just $1, you would have to be right 66% of the time in order to break even. This is math. There's no arguing it. This is just exactly what it says. This is how it works. Unfortunately, a lot of beginner traders fall into this camp over here. Their average losers are bigger than their average winners, often twice as big, if not even bigger. This was what it was like for me when I got started. So the reason my average losers were twice as big as my average winners was because I had this habit that when I would have a winning trade, I would be scared it would turn into a loser. And what would I do? I'd press the sell button right away. I'd just get out. I'd be like, I got to get out of this thing. I'm afraid it's going to turn into a loser. And next thing you know, I'm pressing the sell button. I'm getting out only to watch it go higher. And I feel like an idiot, but well, I sold. But on my losing trades, the price would start to go down. And rather than just cut my loss and get out, I would hold. And I would hope that it would turn around. And I would hold the whole position until finally I took my loss. And so my losses became big, double the size of my average winners. And with that, I need to be right 66% of the time just to break even. That was really hard. So in my first 2 years of trading, I struggled. Now, my first year, I actually made money. I made about $30,000. But in my second year of trading, I gave that all back. I lost $30,000. Now, if we look at my metrics right here, what you're going to see is that my accuracy today, well, this is over the course of $12 million, is 68% accuracy. I'm right 68% of the time. And my average winners and average losers are about the same, $1,500, more, give or take. They're slightly skewed to the negative, but they're pretty close to the same. $1,400 losers, $1,500 losers, $1,400 winners. Accuracy 68%. Now, if I still had a inverted profit loss ratio where my average losers were 2,800 or 3,000, you could say goodbye to that 12 million. I wouldn't have it. So in truth, what has given me this profit is my accuracy and my ability to keep my losses as small as they are. They could be bigger and they're not. Now, if my winners were bigger, I would certainly only make more. But when you start swinging for home runs, what can happen is your accuracy declines. So these are all part of sort of an intricate relationship. Now, what I'll share with you is, as a beginner trader, I would encourage you to strive for a profit loss ratio of 2 to 1. Aim for 2 to 1, where your average winners will be twice your average losers. You're going to be optimistic, and in the end, you're probably going to come in closer to 1 to 1, because that's what happens with most traders. But if you aim for 1 to 1, you'll probably come in low and you'll have an inverted profit loss ratio. So aim high, 2 to 1, and it's okay if you come in a little bit low. Now, when it comes to accuracy, again, you want to aim high for 65, 70%, but realistically, it's very common if you come in closer to 55 to 60% as a beginner, and that's okay. Now, what I'm starting to build out here are your 3 core components of profitability. You've got your accuracy, your profit loss ratio, and then your consistency. I'm going to draw a calendar here with all the different days of the month. So what we want to see is that you're consistently green, green, maybe one red day here, and then green, green, maybe one more red day here. It's okay to have red days, but you want to be green more often than you're red. Now, if you focus on A+ quality setups, what's going to happen to your accuracy is it's going to improve. When your accuracy improves, out of 100 trades, you have now 65 winners instead of just 50. Now you've got more winners. You've cut out some of the losers. And because you focus on A quality setups, you most likely cut out what would have been some of your biggest, most egregious losses. So when you focus on A quality setups, you focus on accuracy first. What typically improves is your profit loss ratio. Your profit loss ratio gets better. And when your profit loss ratio gets better, your consistency gets better. And when your consistency improves, your confidence gets better. And now you've got this second layer. So all of this is happening on the first layer with, let's say, 100 shares. But now you have increasing your share size. So scaling up. And you cannot start scaling up and increasing share size until you first have consistency and confidence. So in order to build a positive feedback loop, it starts right here with accuracy. Now, what a lot of beginner traders struggle with, and I was no exception, is a negative profit loss ratio with poor accuracy. And you have sometimes a hard time knowing what to focus on. What do I do to make things better? I just keep losing. Sometimes you'll feel like I just need to hit a couple of huge winners and that'll change everything. That's not going to change things. And by trying to swing for a home run, most likely, you're going to strike out. You're going to have more big losses. And you're going to realize that, in the analogy of a home run, you could have had a double or maybe even a triple, but you went for the home run, you gave back everything. You got struck out, right? So that's something that's really important. The bigger your winners, typically, the lower your accuracy will be. Because in order to hit these big winners, you have to be up sometimes significantly and choose not to sell and keep holding and holding and holding and holding. And a certain percentage of time, you do that and it goes all the way back down to flat or break even. So I am a big advocate of being a base hit trader, focusing on consistency. And one of the reasons that I do this is because my strategy that I'm beginning to share with you was born during a period in my life when I was 100% dependent on the income I made from trading. I couldn't afford to be speculative. I couldn't afford to gamble with my account. I couldn't afford to hope a stock would go up 400% over the next week. What I needed was $100 to $200 today. Consistency. And that's what I strive for. And that's what you'll see in the strategy that I trade, even still today. Because I learned to trade during a period of time when money was scarce, I taught myself to focus on consistency. I still trade that same strategy today. Even having made more than $12 million, I don't gamble with my account. I focus on being consistent. I try every single day to walk away with profit. Now, there will be days where I lose, but I respect a certain set of guardrails in my trading. And I'm going to begin sharing them with you. Now, some of you may have already read my book, How to Day Trade the Plain Truth. In this book, as I go through the book, I share with you several of the guardrails I've implemented in my trading. And then later in the book, there's a glossary where all the guardrails are listed. So you go back and refer to them. I'm going to share some of those guardrails with you here in this episode. So the first guardrail, and this actually isn't going to be straight from the book, but the first rule that is very important. Let me do this differently. So I'm just going to go rules. Number 1 is max loss. You have to have a max loss. You have to draw a line in the sand of when enough is enough on any particular day. And it's also worthwhile to do this in total for your career as a trader. Like, how much money and time am I willing to put in before I call it quits? But on a daily basis, to keep things sort of focused, I put my max loss personally at minus $5,000. Now, some of you are probably like, that's big. That's more than my entire account. That's crazy. That's way too much. And that's fine. You got to choose the number that's right for you. But here's the way I came to this number. I have a daily goal. And my daily goal is also $5,000. And what I figured is that if I lose my daily goal one day a week, I can bounce back, no big deal. So what I mentally allocate is up to 4 max loss days per month, 1 per week. And I don't want to go deeper than my daily goal because I don't want to lose more in one day than I will make in one day. So my daily goal is 5,000. So then what's my weekly goal? Is my weekly goal 25,000? No. My weekly goal assumes that I will have a max loss day, which means my weekly goal is actually my daily goal times 3, which equals 15,000. So that means my weekly goal is 15,000, and now my monthly goal is approximately $50,000 to $60,000. Now, I have had years where I far exceeded that. My best year, I actually made nearly $5 million. But more typically, I'm averaging less than that. So if I can be consistent at $15,000, $20,000 a week, I'm very happy with that. In a slower market, if I'm only at $8,000 to $12,000 a week, that's fine too. But this is the way I kind of lay it down. So it's important that your max loss isn't just arbitrary, but it's based within your strategy. So for me, my max loss is my daily goal. All right. So whatever your daily goal is, that should be your max loss if you're going to follow the same system that's been working so well for me. So this is my first rule. Now, rules are only as good as the trader who enforces it. So if you're down $5,000 and you continue trading, you've broken your rule. What happens when you break your rule? Well, you can enforce consequences if you have the discipline to enforce them, or you could be someone who just trades without regard to rules at all. And if you're trading in a ruleless way, unfortunately, you're going to be emotional, you're going to be impulsive, and you'll eventually blow up your account. The traders who are the most successful are extremely disciplined in following the system that they've created. They went to all this work to create a system. I have more than 10 years of historical data that supports my system. Why would I deviate from the rules I've created that have given me all this profit? Now, even as I say this, I will admit that there have been days where I've gotten really emotional, I've gotten really angry, and I have broken my rules. And I always look back at that with a lot of frustration and disappointment in myself. And I share those episodes in, those days in Red Day recaps when it happens. Now, a red day doesn't have to be a day that you broke your rules. Red days happen. But a day where you continue to trade past max loss, now that's where you break your rules. So one of the most important concepts for you to master is the concept of a successful red day. You'll be red a lot as a trader. 4 times a month, once a week, okay? So you're going to be read a lot, even when you become successful. If you're a beginner, you'll be read more. But as a successful trader, you'll still be read a lot. There's nothing wrong with being read. As long as on your read days, you followed the rules, you're good. That's fine. So max loss, follow your max loss and get out. Now, if on your red days you start trading C, D quality setups, you have no one to blame for being red but yourself. But there will be times where you'll focus on all the A quality setups and the market is just not on your side. And that's why it's important to say, you know what? This right now can be a successful red day. I can lock it up right here. I don't have to overstay my welcome. I could say enough's enough and I can live to trade another day. The market will be here for you. So I really encourage you to start to spend some time embracing the concept of successful red days. And rather than think about how many consecutive green days you can have in a row, don't worry about that. Think about how many consecutive days in a row you can have where you implemented your strategy and had discipline. How many days in a row can you have without losing self-control, without spiraling, without falling victim to emotional hijack? Emotional hijack occurs when typically you're triggered by something that happened in your trading. Usually it's a big loss. And suddenly you've become emotionally triggered and now you're trading from just emotion, raw emotion. You're buying and selling huge positions. You're desperately trying to recoup loss. You've actually gone into a fight or flight state, and it was triggered by the loss of money. It created a fear so strong that now you're fighting to make back what you lost. And in those moments, it's your primitive brain that's making all the decisions, and you're going to make huge mistakes because that part of our brain was not designed to work or trade in the market. So when we're trading in the market, we have to be using our analytical mind. We have to be calm, cool, collected. We have to be composed. And if you can't be, you need to walk away. Now, I've come to learn that I have a set of triggers. So my first rule, of course, is that I have to have my max loss and I have to set it. And what I've learned is that I actually need to call my broker and tell them to set that max loss on my account. So if I'm down more than that amount, I cannot trade. Because I know that sometimes when I go deep in the red, I get emotional and I'll keep trading even though I have that max loss. So I actually told my broker to put that on my account. Now, another trigger I have and rule is that if I give back more than half of my profit after hitting my $5,000 daily goal, I have to walk. Because there's something about having your daily goal and then giving back half of it that creates a real big emotional response for me. So I give back half of my daily goal, I have to walk. If it somehow happens that I go from green to red, and this isn't necessarily like if on my first trade I made like $30 and on my second trade I lost 60, I don't really consider that red to green because I never really was green. But if I'm green on the day, $1,000, $1,500, $1,200, and I go red, the second I go red, that for me is like, okay, it's time to walk away. Because it can be so frustrating to go from profit to go from loss, to go into a loss. So going from green to red after, crossing, I don't know, maybe a quarter of or half of goal, something like that. And these are sort of high level, what I would say would be the most important to follow in your trading when it comes to knowing when to walk away each day. You have to know when to walk away. Traders who overtrade their welcome, who trade too long, are often the traders who give back a lot of profit, and it's not worth it. So you really have to discipline yourself to learn when to walk away. Now, I'm going to touch on some additional rules and guardrails as we continue to go through this, but we'll keep moving along here. So step 6, we're going to talk about stock selection. So let's see. Let me just grab my, I'm just going to grab this for 1 second. So we've already covered step 1, 2, 3, 4, and 5. and we're at the beginning of part 2 where I'm breaking down my strategy for you. We're going to start talking about stock selection. And this is going to come back to some of the things we talked about in step 4 on market dynamics. So on any given day, I know that the most attention is going to be on the stocks that are at the top of the scanner. Now, this is an interesting day here where you could see I ended up locking up about $9,000 of profit, which was a great day. And I was trading WISA. On the previous day right here, it actually went up over 100% and was our number 1 leading percentage gainer. And on the next day, the momentum continued. So this was a stock that was the biggest percentage gainer over this 48-hour period. And even though carrying into day 2, it was only the 3rd leading gainer, it was, I thought, the most obvious. And that is reflected in the volume. Look at the volume it had. 8.3 million shares. And this was a great day of trading. Okay, so let's talk about the criteria for me to be interested in trading a stock. So let's see. Number 1, sort of a opinion that I think that that's where I make the most money. That's actually based on, let's see. I'm going to pull my metrics out here. This is actually based on all of this data right here. Again, $12.6 million of profit. And we can look at price and volume. And what we will see is that I make the most money on stocks between $2 and $20 a share. This is where I do the best. Okay, so it's not just my gut feeling. This is actual analytical, statistical data of where I make the most. Now, do I make money pretty much everywhere that I trade? Yeah, over the past 10 years, yes. But if I'm going to focus, I'm going to focus on this area. And what I'm talking about here in this class is how to start day trading as a beginner. So as a beginner, I'm going to encourage you to focus on the areas of the market where I've had the highest level of success. Not to say you couldn't venture out, but let's focus on the areas where I think the success is going to be easier than on the areas where it's even more difficult for me. So number 1, we're going to talk about, and we're going to look for stocks that are priced between $2 and $20 a share. This is my sweet spot, number 1. Number 2, the stock has to be up 10% minimum. So again, this is not just, this isn't just like opinion of, 10% gains are better. This is based on the fact that my performance by instrument movement clearly shows that I make more money when the stock is up 10% or more. Right there. There it is. So these metrics, if I gave you all this historical data, you would be able, maybe not as a beginner, but if I gave all this to an experienced trader, they would be able to start to outline what my strategy is just based on my performance. They'd be like, oh, well, this is what he trades. This is what he does the best on. So number 2, the stock should be up at least 10%. Number 3, we want to see stocks that are trading with 5 times relative volume right here. Now, what's interesting about stocks trading with 5 times relative volume is that it's typically a catalyst that creates that volume. So stocks that have high relative volume, you'll see there's a little bit of a bell curve here. This is, this is relative to the prior day. And I actually want to show you, let's see, this one right here, which is relative to the 50-day average. Both of these are interesting in different ways. So the trade that I took on WISA here, this was an example where the relative volume daily was still 6.9, which is times 6. That's still way, way, way above average. So that's totally fine. This is 5 times. So 500%, 5 times. So this is performance relative to the 50-day average. This is performance relative to the prior day. There will be times where I make a lot of money even though the volume is slightly lower or flat versus prior day. And these are examples of continuation when I'm trading day 1 and then day 2. So when we have multiple days, that's when we see the that kind of continuation. So that is common, and I do like to see that. Okay, so let's see. So we're going to switch back here. So then number 3, we're going to look for five times relative volume. And to define relative volume, it's the amount of volume that's average over a 30-day period. So relative volume for a stock, if it's trading an average of 100,000 shares a day, then relative volume is 100,000. So then if tomorrow it trades on 200,000 shares, the relative volume ratio is 2. And Jeffrey, yes, this is a live class today. So thank you for tuning in. And if you have questions, I'm happy to answer. And Rocky, yes, it is a live class. Okay, so Rocky stands corrected. Okay, so now let's jump back over here. All right, so in order to find stocks like this, we're looking for criteria. So price between 2 and 20, up at least 10% on the day, relative volume of at least 5. So what else am I looking for? Let me grab another marker. Number 4, news catalyst today. Now, it's true that I will trade even if there's no news catalyst, but for a beginner trader, I would encourage you to focus on stocks that have news because these are going to be more predictable. So news catalyst is preferred. And now number 5 is float under 20 million shares. So when a company does an initial public offering, they're selling shares onto the open market. From that point forward, those are the number of shares available to trade. So let's say they sold 20 million shares onto the market. So this represents the supply. That's the number of shares available to trade. All of these things that I've just showed you, these all represent indicators of demand. When a stock has news, 5 times relative volume is up 10%, it's priced between 2 and 20, that creates demand. So the lower the supply and the higher the demand, the greater the imbalance. And when you have that big imbalance between supply and demand, that's how a stock goes up 300, 400% over the course of 2 or 3 days. So this is exactly what I'm looking for every single day. This is the criteria that I use. Now, I'm in a fortunate position where I was able to hire a development team to build out assess stock scanners for me that I use and all of my Warrior Pro members use as well. And these search the market in real time for stocks that meet this criteria. So that is like takes all the heavy lifting off your shoulders. So now instead of having to manually search through 10,000 stocks to try to find the needle in the haystack, this scanner is giving us the stocks that meet this criteria. So now all we have to do is pull up the chart and begin asking ourselves, what is a good entry? So let's talk about it. Step 7, entry indicators. Okay, so let's say, obviously, a stock has hit our scanners and meets all of the criteria for being worth trading. So what are we going to do next? Step 1, I got to find the stock. I'm going to find that on my scanner, so that's going to be easy to do. Step 2, I want to try to figure out what the catalyst is. So I'd like to check the news. Now I'll pull my platform up for you here. So this is pretty easy. I pull up a stock, pull up the chart, I click on it, pull it up, and right down in this window right here, it's going to tell me what the news is. So this is where I'm going to see the news, right down here. All right. So I've got my news down here in this window, and it's automatically populating. Now, I could go ahead and click on this and see, like, read specifically the headline, but I don't really spend a lot of time doing that. And you'll actually notice that during this class, I haven't spent a lot of time talking about fundamental analysis. We have technical analysis and we have fundamental analysis. I'm focusing on technical analysis because when we're talking about day trading and these intraday fluctuations in price, this is all technical analysis. Fundamental analysis is like what Warren Buffett will do. He'll analyze the balance sheet of a company. He'll analyze, the news, the fundamentals, like what the company does, what their earnings look like, what the business model is, what the business risks are. That's all fundamental analysis. Their competitive advantage, who their competitors are, what the landscape is in that sector. That's fundamental analysis. And a lot of those people are not really looking at stock charts at all. They're forming an opinion on the stock based on what the company actually does. But it's not an opinion of what the price is going to do tomorrow. It's an opinion of what the outlook of this company is over the next 5-10 years. And if they do their analysis what they're going to do is they're going to put what they believe is a fair market value on the company. Like if they were going to buy the entire company today, this is how they would value it. And they'll say, so they're going to run these sort of calculations and say, based on this, this, and this, I'm going to value this entire company at, let's just say $10 a share. And then they check the price and they're like, oh, shoot, it's currently trading at $20 a share. So I can't get in it right now. Well, I could, if it comes down to 10, I can get in later. Or in the meantime, I just have to wait, right? Or maybe they see, well, wait, it's trading at $6 a share. This is an opportunity where I can get in because it's trading below what I think is the fair market value. But that's fundamental analysis. As a technical trader, I'm focusing on volatility and I'm focusing on chart patterns. So we like to see that there is some type of news that's bringing in the volume. And that is a fundamental headline. But someone recently asked me, they said, Ross, do you think you should subscribe to a Bloomberg terminal? It's like $25,000, $30,000 a year because you would get the news really fast. And they know that I'm trading based on breaking news because every day when I'm doing a case study, I'm saying, okay, this is the stock I traded. This was how I found it, scanners. This was the news headline. This is where I got in and got out. And they're thinking, well, the sooner you have the news, the more money you'll make. But it's actually not true. So I actually at one point subscribed to one of these really expensive news services. And this is what I found. I would hear the news headline and I'd pull up the stock and it wouldn't be moving yet. And I wouldn't know if the news was good, bad, or indifferent because sometimes the stocks, 10, 15 minutes later, nothing would happen. The price wouldn't move at all. It was like the headline was just insignificant. Nobody cared about it. Other times the news headline sounded great, but the price would drop instantly. This happens all the time with pharmaceutical companies. They'll put out a headline, the price drops. And a lot of times it's because unless you really understand the context of the headline, you're not going to really be able to make a decision on it. So sometimes a headline will sound good, but it's actually bad relative to what they had projected or what they had put out recently. So it's in comparison. So now with context, you're like, oh, I do see why that's bad news. So this was what I found. Being the first one to have the news, I didn't know what to do with it. Unless I'm an expert in each one of these companies and have followed all of their news headlines, and there's 10,000 plus companies in the market that you could follow, so it's impossible to do that, I couldn't know what to do. So instead, I wait for the wave to start. That's what I do as a trend-based trader. I wait for that first wave to begin. And when the first wave begins, then at that point, boop, 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 the stock's gonna be hitting my scanners. Now it's up 10%. Now I'm like, okay, let's check it out. I check the relative volume. I check what the news catalyst is. Of course, I check the price. I check the float, right? I start doing my due diligence here. And if I like all these things, then, it's gonna continue moving higher. And then on the first pullback, I'm gonna be buying that dip. And then I might even buy the second dip. And I'm gonna start trading it. And then this is trend-based trading, where we're buying and then selling, and then buying it back and then selling and selling. And the reason we sell here is because we don't know if it's gonna just start rolling over. We've got to take our profit and we've got to focus on consistency. And so I'm doing base hits. I get in, I get out. I get back in, I get back out. And maybe I take 2, 3, 4, 5 trades on one stock. And this is the most obvious stock to trade today. So as long as it's the right stock, this is what I'm gonna focus on. Okay, so what is my entry indicator? So let's get dialed into this little zone right here. I'm gonna do this by drawing a pattern. It's a very common pattern that we see really all the time. Okay, so we're gonna see a stock that squeezes up like this. So what happened was news catalyst event occurred right here, and then trading began. The price started to move up. All right, price starts to move up. Now, it's now hitting my scanner. Scanner alert, scanner alert, scanner alert, scanner alert. So that means I'm seeing it hit the scanner just like this stock did right here. These are all scanner alerts. And I check all of them. I check to see, do I like it? What's, I dig deeper and kind of figure out how much it's moving and the relative volume and everything else. So all of that's happening. I've done my due diligence, and let's say that this meets all 5 criteria for being the right type of stock to trade. Price, float, relative volume, news, everything. Okay. So it moves up, and now it starts to pull back just a little bit. What's happening here is there's some early profit taking from people who were in down here or who maybe were already holding the stock before this move. So the second they see a red candle, they begin to feel emotion. The emotion is fear. Uh-oh, my loser is going away. I better sell. So they sell. Some more people sell, and the price dips down. Now here, one of two things will happen. The price will either just continue to sell off, in which case there is no trade, and I would never press the buy button. Or the trend continues. So that moment where we fork in the road, we either go up or we keep going down. That's the spot where I'm looking to take my first trade. This is going to happen right in here. And it's going to happen as soon as a candle makes a new high. Because what's happening here is the wave was going up, it was going out, and now right in this moment, this is what we would call an apex. The moment this price breaks, and this green candle breaks the high of this red candle, that right there is the second that I buy. And now I'm looking for a move for the next leg up. Now, when I take this trade, my max loss on this position is the low of this red candle. So that's my max loss down here. And if my entry is right here at the apex, typically these are pretty close together. So let's just say it's a 20-cent max loss. What's my profit target going to be? This is going to go back to what we talked about with risk management. Profit target is going to be 40 cents a share. That's what I'd like to be able to make. So I'm going to look at the previous high a day, and I'm going to look to see, is there any nearby resistance? I'm going to do this by looking at the daily chart, and I'm going to ask about the position of the 200 moving average, the 200 EMA, daily gaps, and windows. I'm not going to get into all the details of this, but these are a couple of things that I'm going to look at on the daily chart. And if I don't see anything nearby, then that's the first target, a retest of the high, and then continuation higher. Now, what typically happens with these stocks is we get 1 and 2 waves up. So we get one pullback, a second pullback, and the second one gets bought up as well. Because traders who missed the first one are now eager to trade something that's moving. And this could go up 100, 200, 300, 400, 500%. Or this could be up only 30%. It could depend on the price range. But we can see huge moves, and it's following these patterns right here. Now, this is a pattern that I've been trading and teaching for years and years and years. And it works just like the red light on a traffic signal works. People have learned to recognize what this pattern means. So let me grab my other slide deck here for you. Okay, so I'm just going to grab a slide in here. I'll scroll down a little bit. By the way, if you do have questions, feel free to put them in the chat feed. Let's see. This is chapter 5. I got to go a little bit further to chapter 7. Maybe I'll actually go to chapter 8. Okay, so chapter 8, we're going to go back here. Chapter 8, part 4, chapter 8, part 2, chapter 8, part 1. Okay. All right. So I'll give you a little sneak preview here. This is some content right from my Warrior Pro curriculum. As I mentioned earlier, for people who are tuned in, I'm doing this special live broadcast because today, this is the 10-year anniversary of when I taught my first day trading course. And this is what it's now evolved into. So we've got an anniversary sale going on right now. But for those of you guys who are going to watch this down the road, there'll be some links in the description where you could do a 2-week trial at Warrior Trading for $20. So you're welcome to check it out. But those of you guys tuning in live, make sure you check out the anniversary sale we've got going on. We've got some nice specials. Okay, so this is where we're buying that first and second pullback. And this is the example here of what this looks like on a chart. It's going to take a second to load because this file is huge. So we have this nice rally up. Oops, sorry. What did I do? Oh, switch tabs. All right, so whatever. We've got this nice rally up here. Oh my gosh. Nice move up, pull back, and a move higher. Now, I want to show you this in the animated form. So, first candle's green. The stock has breaking news. It's hitting our scanners. It's moving higher. It's moving higher. It pulls back. It pulls back again. Now down here, do I buy right here? I want to buy when the first candle makes a new high. Boom. That's the spot where I'm buying. Now, of course, I made this so it looks beautiful because I did it myself. But this is the pattern that we look at. First candle make a new high. So now let's look at some live examples. Pull back right here. One red candle. Next candle makes a new high. Boom. Two red candles. Next candle makes a new high. Boom. Two red candles. This candle makes a new high right here. A few candles. This candle makes a new high. Stop is at the low of the pullback. And notice the position of our moving averages. We've got our 9, our 20, we've got our 200. We've got the volume weighted average price. Right here again. Same pattern. First pullback, second pullback. First pullback, second pullback. This one went a little higher. First pullback right here. First pullback here. First pullback, second pullback, third pullback. First pullback, second pullback, moving higher. First pullback, second pullback. So this is the pattern that I trade almost every single day. I'm using time frames of 1 minute charts, primarily 1 minute and 5 minute, because I'm trading fast moving stocks. This is a nice pullback right here. The stock went from 4 to 8. That's a 100% move. This one goes from 620 to 730. Not as big of a move. This one put in a pretty nice move. This one right here, nice move from 26 up to 30, several dollars a share, a little higher priced. Now on a very volatile stock, it's true, I'll use a shorter time frame. This one went from $6 a share to $36 a share, if you can believe that. This is a day where I finished up over $100,000. This is an insane move. That was in 2020. Now, this is going to be a little case study of a momentum stock. MSGM went up 3,000% in 2 days. So we had that multi-day continuation. It began with breaking news late one day. The news comes out after hours, and the stock begins to move up. A lot of traders missed it because later in the day, people don't notice it. The next morning, it hits the scanner. It's already up 100% pre-market. It squeezes up at 4 a.m. Between 4 a.m. and 7 a.m., it has light volume. And at 7 a.m., it squeezes right here, right at 7 a.m. It pushes higher up to 8, pulls back, goes up to 850. By mid-morning, it's up 580%, and it squeezes from $8 to $28 a share. This is incredible. This is what we like to see. So the question is, was that the right stock to be trading? Yes, it met all of the criteria. And let me just go back here. It met all the criteria for being the right stock to trade. It was the leading percentage gainer in the market. So let me just zoom in on this. All right, it's a little blurry, but leading percentage gainer in the market, up 182%. Price between 2 and 20, sorry. Volume, 17 million shares. Float, 332,000 shares. Relative volume, 2,254. That's incredibly high. It has a news catalyst. Check, 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 check. So now the only question is, where are the dips? Can I buy the dips? And this gave us some nice pullbacks, some nice dips, and it pushed higher. It kept going higher. This was a particularly nice pullback right here that occurred right around $10. Okay, so let me just back out of that. Sorry. All right, so I'll put this back up here for now. Okay, so when I get in a trade, and let me just find my other slide deck here. So when I get in a trade, one of the first things that I'm looking for is I want to see strength. So my entry indicator, when that first candle's about to make a new high, what I want to see, we've got, let's see, do I still have it in here? Push higher. What do I want to see happening right in here? Right in here, when that first candle makes a new high, this is what I want to see. I'll list it right here so it's clear. So number one, surge in buying, right? Now, if I'm timing my entries correctly and I'm getting in at a true apex point, then there should be a surge of buying because other people should see this same pattern. So there should be a surge in buying right at the apex point. Number two, the price should go up immediately and should go up like 20, 30 cents a share. It should immediately squeeze up. That means I'm correct that this was the right entry. So surge in buying, price should immediately go up. And what that means is that this is a trade where you're going to have almost instant resolution. You're not going to be sitting for days, weeks, wondering what's going to happen. You're going to know within the first 30 seconds if this was the right trade and you had the right entry. If it's the right trade, it's going to break out instantly. It's going to start squeezing higher. So my entry indicator is as it's pulling back, I'm watching the high of that previous candle. I'm looking at this candle and I'm thinking, okay, this is the high right here. I'm looking for that price to break. So when I know that that's the price, I start thinking, so a couple things. So when I know that that's the price, I pull up my my order entry right here. I'm looking at the price, and let's say that apex price is 17.24. So if the price is 17.24, I'm watching 17.24, and what I'm looking for are to see orders going through right here, which tells me this is the time in sales. This is a display of every order that's going through the market. I want to see those orders going through. That's going to tell me other people are buying. Other people are buying this stock. Other people like this stock. That's what I want to see. All right. So I want to see the volume come in. And then when I see that, that's when I jump in. I go ahead and buy. This is typically on a 1 minute time frame, a 1 minute candlestick chart. So now I'm buying right here when I see all that volume come in. And now I want to see it continue to squeeze up and continue to move higher. My max loss was the low of the pullback. All right. So pretty tight. This is nice because my entry is pretty close to my max loss on the trade. Now, I won't risk $5,000 and potentially go red on the day and hit my max loss on the day on one trade. But usually the way I'll do it is on my first trade, I'll risk like $500. And if it's a winner and I can be up anywhere from $500 to $1,000 of profit, then I've broken the ice with my first trade. I'll explain more about that position management in a second. So these are the things that I need to see. Surge in buying, and the price should be moving up. So something that I struggled with over the years was on my first trades, I would have a tendency to try to swing hard, try to hit like a big winner. And the risk with doing that is that you can have a big strikeout. You can end up making a big mistake and having a big loss on your first trade. And now you're down $5,000. So what I started doing to help build more consistency is I started each day by capping my share size at about a quarter of full size. So if your full size position right now is 1,000 shares, that means you'd be starting with 250 shares. And until I had made about 20 cents per share on that starter size, I don't increase my positions. So for me, my starter size is 5,000 shares. 20 cents is $1,000 of profit. And until I'm up more than $1,000, I do not increase my share size. So that means on this first trade, if this was my first trade of the day, I would be buying with up to 5,000 shares. If it goes up 20 cents and I'm up $1,000, great. Now I can lift my max share size, move it up to 20,000 shares, and I could take trades 2, 3, 4 and continue trading it until I'm up $3,000, $4,000, $5,000 on the day. But if I go red on that first trade, I'm down $250 or I'm down $500, then I'm going to continue to trade with small size until either I cross over 1,000 on the day or I start getting close to my max loss and I'm just like, you know what? It's not happening today. So this is a technique that I'm using to manage my risk, where basically during the time when I have the highest risk of going red on the day, I trade with small size. And I don't trade with big size until I'm already in the green on the day. And then by that point, I have a cushion where if I make a mistake, I can stop out, break even, and call it a day there. So this is helping me be a more consistent trader. Now, these are my entry indicators. Again, to reiterate, these are only valid when we focus on the right stocks to trade each day. If you try to apply this to the wrong stock, it's not going to work. So now let's talk about exit indicators. Okay, so something that's kind of interesting for me is that my exit indicators more or less are the inverse of what I want to see the second I get in a trade. What I want to see the second I get in a trade is a surge in buying and the price moving up. So if I'm in a trade and I see buying stops, or I see price sideways, price dropping, or big sellers, these are all indicators to exit the position. If I don't see any of these things and the price is continuing to go higher, So let's just say we had the move up right here, and then we had our little pullback, and then the price moved higher. As a beginner, what I used to do is I would dump my whole position. I would sell the whole thing like right here because I was afraid of it turning into a loser. And now I'm saying to myself, well, wait a second. If I'm not seeing a valid exit indicator, why would I sell? Keep holding. So I want to hold as long as I can. Now, maybe at some point up here when we start to get a little extended off of our 9 moving average, I'm thinking, okay, we've got risk of having a flush back down. Maybe I'll sell half of my position to lock up a little bit of profit. And then I'll hold the rest and I'll let it ride. And it goes up a little further. Maybe I'll now sell, a quarter of my position. I'll sell a little bit more. And it keeps going higher. It keeps going higher. And now I can't buy it up here. I can't buy right here. This is too extended, but I'm still in and I can keep holding a little longer. So then maybe I sell a little bit more, sell a little bit more, and then I finally sell the rest when we get that first candle coming down here. And now I'm out of the rest of the position right there. First candle that goes red. So the pattern that we're talking about here is when we're looking at trends, what signifies the trend is changing? Now, to be honest, the price stopping and the price going sideways don't necessarily signify that the trend is changing. They indicate it may be changing. And so I would say the price stopping is sort of the yellow light caution flag. Even big sellers don't necessarily guarantee, but when the price begins dropping, that's when we've got the red light. That's when we've got to get out of this thing. Okay, so let me pull up a chart and show you this pattern. I'm just going to erase the whiteboard here. Okay, so we're going to pull up this chart here. And let's see, we're going to look at WISA again. This was the stock that gave some nice trades here. All right, so we're going to back this up. So if we looked at this right here, just for instance. Now, this was kind of interesting because the price was moving higher right here, moving higher, moving higher, moving higher. And we had a red candle, but it actually didn't dip down. It wasn't a pullback. I did get in right here, though, because I thought that this candle was a reversal indicator. And I thought maybe people were going to short because it was like it had already been up 2, 4, 6, 8 green candles. And then when it surged higher, I was like, I'm going to get in right here with a stop at the low of this red candle. And then what I'm thinking is I don't want to sell the final position until the first candle makes a new low. And that occurred right here. On this red candle, it made a new low. So if we zoom in on this, you'll see how these are all making new highs, new highs, new highs, new highs. And then this is the first time you have a candle where the low of the candle is lower than the previous low right there. And then we start to move back up. We're making a new high right here. So we're back in on this candle. And then where do we get out? Well, we have a pullback here, but none of these candles actually went lower than the previous candle. They kept going higher, right? So when they keep going higher, that makes me think I should keep holding this position. This here was when it dropped. So, and certainly watching those volume bars as they're growing is an important indicator because that's telling you that more people are buying. The MACD is open, so all of our indicators are confirming that this is something I should be focused on. It's an obvious stock. Everyone's dialed in on it. So this just makes sense. This is what people are focused on here today, right? So for me, exit indicators, number one, well, I don't have to. So I'll just to reiterate, I don't need to write them down again. So we want to see if price sort of stops moving higher, that's a caution flag. If the price starts going sideways, that's a caution flag. If we start to see some big sellers on the level 2, that's a caution flag. But the ultimate confirmation is when the candle makes a new low versus its previous candle. That's when we're confirming that the trend is shifting. Now, we don't know in that moment, is this just going to be a small pullback or is it going to be a big pullback? And it doesn't matter because what we know is short term, the trend is shifting. And so as a day trader who's focusing on being consistent and hitting lots of base hits, it's time to get out of the position. I can always come back and try again. But for right now, I got to jump out. So that's the spot where I say, all right, I'm going to jump out. I can always get back in later. And by the way, the links for, so I see someone asking about the 2-week trial. That link is pinned in the description. The link to do a 2-week trial at Warrior Trading for $20, that's in the description. The link for the anniversary sale should also be in the description. So you should see both of them right there. Okay. So now let's step back for a moment and let me pull this. Let's see, what slide deck am I looking for? Okay. So part 1 of this class on how to day trade is about the basic required knowledge. Setting up your trading station, how to buy and sell with a high level overview of order types, hotkeys, level 1, level 2. Step 3, candlestick charts. And I didn't talk about all the different candlestick patterns because there's dozens and dozens of them that I use, but we talked about the anatomy of candlesticks and we talked about the technical indicators. And then step 4, we talked about market dynamics and the power of fear and greed. Then we got into part 2, which is developing or adopting a strategy. And this is something where when I got started, I didn't have the opportunity to adopt a strategy that someone else was trading. You know, I mean, I started a long time ago when it was in the late 90s when I got into the market. But when I started with my first real money account in 2001, 2002, there weren't the resources to get started. There were some places you could go, like in New York City or Boston, and you could get a job at a trading firm. And I didn't know whether or not I was going to do that. I actually tried to apply to a place like that, and I got rejected. So I was like, so I didn't know how to get my foot in the door. So what I ended up doing was a lot of trial and error. I just was trading. And what I was doing while I was trading was I was being very detail oriented about tracking each one of my trades in an Excel doc, in an Excel sheet. You could use a Google sheet today. So I was tracking each one of those trades and I was making notes about the time of day, the price I got in, the price I got out, the setup that I saw. I would take some additional notes. And, you know, I was just trying to better understand what I was doing. And for me, that was critical. Because what ended up happening was in my first year, as I shared, I had a little beginner's luck. I made about $30,000, which honestly was impressive. I think it might have just been like the market was stronger that year. Second year, that luck ran out and I lost $30,000. And now I had nothing to show for those first 2 years. But during year 1, I had taken the $30,000 of profit out to pay my cost of living. So when I came into year 2, losing $30,000, basically what that meant was that instead of paying my bills with trading profits, I was paying my bills on credit cards. So I was accumulating $30,000 of credit card debt in order just to not have to take money out of my trading account. So then what ended up happening was I had a $5,000 loss at the beginning of August. It was the new month. My goal for the whole month was to make $5,000. I was trying to make about, $200 a day, $1,000 a week. And I figured if I could do that, that was great. So that was my goal. And to lose $5,000 at the beginning of the new month was devastating. Now it was like all hopes of hitting 5,000 are gone. Now I'm going to be working the whole month just to get back to flat. But what's worse is I had lost so much, I would need to add more money to my account to keep trading. So my account was offline. And at this point, I remember going into my barn. I had a wood shed right next to the barn where I stacked up firewood. I remember sitting there, I split a bunch of firewood because I was like so angry. And then I just sat there and I was like, what am I going to do? How am I going to turn this around? And I ended up going back into my little office and I opened up that Excel doc and I started looking at my metrics. And I just started asking myself, what is there here? Now, in those days, I didn't have this software that I use today for analyzing my metrics. I didn't have this. All I had was the raw Excel doc, the Excel data. And so what I did was I started sorting the data, sorting the table. And I would sort by first biggest winner, biggest loser. So I was looking at the biggest losers and I was like, what did I do wrong on these? And a lot of them, it was like, well, I got emotional. I was already red on the day, and then I took that final Hail Mary pass, and it was a huge loss. So I was like, if I could just stop doing that, man, that would save me a lot. I looked at some of the other big losses, and they were trading again, like later in the afternoon. And I was like, well, okay, so if I stop trading in the afternoon, so I started kind of going through all of this data, and I can even just show you here. This is just 1 month of data, but it was interesting because I think when you look at it, you'll see like, oh, there's some conclusions to draw. So let's look at this data right here, and tell me if you would draw any conclusions. Okay, so would you draw any conclusions about the best time of day for me to trade based on looking at this data right here? I think the conclusion that it would be safe to draw is that I should stop trading before 7 a.m. and I should stop trading after 12 p.m. Right? This is what these metrics have the opportunity to show you. They can show you what in your trading right now is working and what is not working. Now, what about price and volume? What does this data tell me about the price of stocks I'm trading? What should I focus on? I should keep focusing on stocks between 2 and 10, and I should probably stop focusing on stocks below 2 and stocks over 10. Now, as it turns out, this was just a limited period of time. And as time expands, I can trade over 10 and do well between 10 and 20. But this data, the idea is that if you're actively trading, you're producing a ton of historical data. And in that data are hints and clues at what might be working. So in my instance, when I had this epiphany, I went through all of this data. I looked at the winners, the losers, and what I discovered, and this is so important, is that my biggest winners were on stocks that were up more than 10% on the day. Okay. So now this was just like, this is what the data said, up more than 10% on the day. So this marker is dying. I'm going to let this be its final. So up 10% on the day. Oh boy. Oh my gosh. 10%. Okay. Up 10% on the day. And what I also discovered was that these stocks had high relative volume on the day that I traded them. They didn't all have news. A lot of them did have news, but there were some that didn't have news, but that still had high relative volume and high percentage change. So, you know, the news was not for all of them. My best trades were between 9:30 a.m. and 11 a.m. Okay. Floats under 20 million shares. And this became the criteria that I set for whether or not I would take a trade. I had to discover everything I've shared with you the hard way through trial and error. Now, you have a privilege that I didn't have. You have YouTube, episodes like this. You have people like me who are teaching classes. Now, the one challenge you have is that there's a lot of people out there that are teaching classes that are not actually profitable traders. They're making money just as content creators. And it's hard to distinguish them because some of the content creators put a lot of money into creating really nice content. So what I would always encourage you to look at is look at their website and ask yourself if you can find their broker statements, and ask them for broker statements. Say, can this person prove to me that they're actually a profitable trader? Now, if you go over to my website here, let's see, we've got 2024 statements right here. And this is my audit report. This is 7 years of audited trading results. This is when I began my small account challenge on January 1st, 2017. So I began, of course, 0% return at that time. And let's get to the dollar section. $583 was day one. January, I made $16,000. That was January of 2017. February, $60,000. March, $28,000. Was red in April, green in May. Anyways, finished year one, $335,000. Year two, $499,000. Year three. So I just kept trading. And then we had .com, or not .com. We had COVID, the COVID market boom. So 2020, 2021 were incredible. 2022, 2023 were a little slower. 2024 is on track to be better than 2023. So moving back in the right direction, which is great. Nonetheless, this is 7 years of audited trading history. That's real money. So you guys have the benefit of being able to learn from people who are proven profitable. You have to weed through the ones who are proven profitable from the ones who aren't, but you don't have to go through 2 years of trial and error trying to figure out your own strategy. That's what I did, trial and error. And I almost failed. I almost had to give up, but I finally made this discovery right here. I then added more money to my account. I sold some stuff that was in my garage on Craigslist in my barn. I funded my account with another $5,000, and I said, this is the last time. I'm not going to fund this account again. This is the last time. I don't have much more stuff I can sell. So this is going to have to be the last time. And with that, I had the pressure to be very disciplined. And so what I did was I came in every morning. I traded. I sat down around 9 a.m. I traded until 11 a.m. and I was done. I walked away. And what I ended up doing is I went outside and I spent the rest of August painting my house. I got some buckets of white paint and I said my house needed painting, and I can't afford to hire someone to paint my house. So the paint was peeling. It looked terrible. So I was like, I'm going to paint the house. And those, 5 gallons or whatever it was, probably more than that, but whatever it was, 10 gallons of white paint. The amount of money I spent on that white paint saved me so much money in trading losses because it got me into a routine of focus and discipline. And I developed confidence. So now let's go back to something that we talked about before. We're going to talk about this positive feedback loop. So I focused on accuracy. I focused on trading the highest quality setups. That improved my profit loss ratio. Now, I had a new system that I was following that was helping me with these A quality setups. My profit loss ratio improved immediately. My consistency over the course of the month, the calendar of all the green days and all the red days, that went up. And now what happened is what's a good little icon for self-confidence? I don't know. Maybe it's like an arm with like a big muscle. All right. So this is like your arm. It's kind of funny looking, but my confidence started to go up. And when my confidence started to increase, then my share size went up. And then my profits went up. And then that made me even more confident. And I was able to increase my share size even more. Went up. And the profits went up even more. And that created even more confidence. Now, it's not to say I didn't have setbacks at times. I did have setbacks at times. But this was the beginning of a positive feedback loop. And this has now carried me more than a decade into my career as a full-time trader. So you guys have the benefit of being able today to track all of your trading, to export your trades, and then to import them into a platform like this. So when we're talking about step 9, reviewing your metrics, this isn't something to overlook. Like, oh, step 9, review your metrics. It's not something to overlook. This is something that is critical to your ability to recover from mistakes and from losses. You've got to import your metrics so you can make educated decisions. So everything that I've been sharing with you here is to help get you ready for what I would say is day 1 of trading in a simulator. Day 1 of trading in a simulator, for some of you, you're like, oh, well, I'm already trading with real money. Okay, maybe. But if you're not trading my strategy yet, what I would encourage you to do is to start practicing trading the strategy that's working for me. It's a proven strategy. It works for me. I've got 10 students who have made over $1 million. It works for them too. Now, I'm going to tell you, as always, their results are not typical. My results are not typical. I don't track the results of every trader who's ever taken a class or watched a video that I've taught. So I can't tell you the total success rate. But I can tell you that this strategy does work for the people who apply the rules of the system correctly. The reason I can't guarantee that you'll be successful is because I can't force you to follow the rules. And a lot of people will deviate from the rules. And I did too, when I was getting started. I had a really hard time with discipline. But what I encourage you to do is to implement the things I'm sharing with you, to start practicing it in a simulator, to start tracking all of that data, and then to make it part of your habit that you're reviewing that data at the end of each week. And then you're making action steps for the week ahead. You're saying, okay, based on this week, this is what worked, this is what didn't work. And then you're continuing to sort of make improvements, make adjustments to constantly try to get your trading better and better and better and better. I'm here as a resource. Whether you're a student at Warrior Trading, you become a member, you do a 2-week trial, you're welcome to do that. I'm here as a resource. You can throw comments on YouTube videos. I'm always happy to answer them. But you have to just continue focusing on making progress. You know, the fact is the best time to learn how to trade would have been 10 years ago. So you could have profited during the COVID boom. The next best time would have been to have been learned in the early 90s. So you could have profited from the dot-com bubble. But the next best time is now, because by starting to learn now, you'll be beginning to accumulate the general knowledge and the actual strategy. So you'll be able to capitalize on the next, boom in the market. And we don't know when that's going to be. Maybe it's next year, maybe it's 10 years from now. We don't know, but when it comes, you'll be here. So I would say these are the 9 high-level steps to get started. Now, I'm going to talk about things that you guys can do to keep learning, including some recommended reading, and I'll share the link for the 2-week trial at Warrior Trading, and I'll talk a little bit about the anniversary sale. But I also want to open up this to Q&A. So I know some of you guys were like, is this a live class? It is a live class. I haven't answered every one of your questions that you guys have been posting. Zodom, I see you're like, oh, this is pre-recorded. It's obvious. So it's not pre-recorded. And then now you stand corrected, just like Rocky did before. But I didn't want to distract my train of thought too much by jumping off into questions. Every now and then I saw one that I was like, oh, that was good, but I should have answered it like 2 minutes ago. And now I'm sort of off on a different. So please, let's do a little Q&A here. And so I see a great question there about level 2. So I'm going to answer that. So you guys start throwing questions in the chat feed. I'm then going to scroll up and answer the questions one by one. And what I'm going to do first here is give you some recommended reading so you guys can keep learning. Okay, so we're going to switch to the whiteboard here. All right, so first book, here's my first book for today. I'm going to move this out of the way. So this is The Happiness Advantage by Sean Achor. The reason that I'm going to make this the first book is because you cannot underestimate how a positive brain fuels success in work and life. Now, I'm not trying to be all, floofy here, but I think that this really is important because I have found that in the times when I'm trading the best, I have so much confidence. I'm feeling so positive. I'm feeling so good. And when I can maintain that headspace, I can be on long, extended periods of really good trading. But once I start to get knocked down and I start to question myself, I start to get frustrated, I start to get emotionally shaken, that's when I can go into these periods of really emotional and volatile trading. So the first book I would recommend is The Happiness Advantage by Sean Achor. Now, for those of you guys that want more of a technical book, this is the Candlestick Course by Steve Neeson, which is way too expensive at $75 US, but you might be able to find a used copy. This is something that I got more than 10 years ago. I don't know the date on this particular book. This one's 2003. It's a very old book. But this is the cool thing about trading is that a lot of this is timeless. Now, he gets into a little bit more detail than I think is really necessary for the markets that we're trading. To be honest, some of the very subtle candlesticks that he'll mention, I'm like, yeah, I don't think people really are noticing that. He gets into almost distinguishing like the shades of color in traffic lights. Like green is green, like orange, yellow, I don't really care. Like it kind of says the same thing. So it's good high level. To be honest, if you watch my episodes here on YouTube on candlestick charts, I think that they're superior to this because they're interactive and I think you're going to get more out of it. But I understand people have different learning styles. So knowing your learning style is important. Are you the type of person that learns really well from YouTube videos? If you are, then keep up with these, and there's tons of them. If you're someone that generally learns and really comprehends and consumes things better through reading, then this is a good book. If you're someone that learns a lot by doing things hands-on, then for sure, like the 2-week trial is great, or using a simulator or something like that is good because you could start practicing and really playing with charts and getting in there. That's the way I learn best, which was what sort of had me on a path of learning by trading with real money. But you can learn in a simulated environment just the same. So I would encourage you to do that. Okay, the next book is Quit by Annie Duke. The Power of Knowing When to Walk Away. This is something that I learned to walk away at 11 a.m. every day. When I was at the beginning of my learning curve, at year 2, when I made this had that big mistake and then realized I needed this discipline to sort of recover. So this is about knowing when to quit each day. It's a fantastic book. I think you'll really enjoy it. And then we have Thinking in Bets, also by Annie Duke. This is good in just the way you're sort of thinking about trading. Of course, there's my book, which you guys can read. The audiobook is uploaded on YouTube, which you could listen to for free, so you could check that out. This is a book, Little Market Wizards. It's a very short read. It's interesting. I think it's worth a read, but I wouldn't go crazy on it. Just read it once. Dark Pools. This is an interesting book for entertainment. Same with So's Bandits, but these are hard. Well, this one's harder to find now, and this is not super topical or relevant. It's more of just like nice vacation reading, to be honest. It's more entertaining. It's not really relevant. Trade Mindfully. This is a great book by Gary Dayton on the mental side of things. And Thinking Fast and Slow is another good book, although I disagree with the way he characterizes day trading in this book. He's sort of negative on it, and I think that there's at this point a lot of data that disproves that attitude. So anyway, so that's some continued reading for those of you guys who want to continue learning. And of course, tons of episodes I've uploaded right here on YouTube. By the way, those of you who haven't already subscribed to the channel, I hope you do hit the thumbs up for this episode. I hope you do subscribe to the channel because there's lots of trading strategy episodes that I upload. My curriculum, my full-length curriculum is over 100 hours of content at Warrior Trading. And while some of you may think, oh, you've got a lot of content on YouTube, I do. I put a lot of free content on YouTube. But the content that's in the curriculum has been organized in a learning path using enterprise software for online learning. It's the same software used by big companies for online education. There's quizzes, there are PDF downloads. It is a fully immersive environment. And then the classroom setting is my live broadcast that's running every single day. I used to do my live broadcast as a morning show on YouTube. I decided to stop doing that about a year ago. I decided that it didn't make sense to give that away for free on YouTube. That was giving away too much value. I like putting out a lot of this educational stuff on YouTube, but when it comes to my actual trading, you're not able to really make the most of the broadcast if you don't understand my strategy. So at this point, my live audio video broadcast is only for members at Warrior Trading, and it's not something that's going to be streamed on YouTube for free. During COVID, when we were all in this lockdown, I was like, I'm just going to start streaming on YouTube because, we're all kind of in this together. And then I kept doing it for a while, but I kind of got to a point where I felt like it wasn't helping people in the same way that the educational content helps people. And in fact, maybe some people, it was encouraging them to trade with real money when they really shouldn't, even though, of course, I always tell people not to trade with real money until you first proven profitability. I think some people would just not make good decisions with that. So, I have to do the best I can to encourage you to make good decisions. You're going to make them on your own. So there's only so much I can do, I suppose. But all right, so let's do some Q&A. I'll back out of here. So you've got the recommended reading, which is great. Becoming a member at Warrior Trading, you guys can either use our anniversary sale coupon code that we've got going on right now for those of you who are watching this live or are watching within the next 48 hours before the sale ends. And everyone else, you guys can use the link, which will be pinned to the top of the comments, to do a 2-week trial at Warrior Trading. By the way, in case you didn't know, my course has been rated by Investopedia as the most comprehensive day trading course. That's something I'm pretty proud of. There's a lot of FAQs here. You can mouse over these and see what some of our members say. Ernesto says, Ross is the best teacher trader ever. Thank you. let's see. Thank you for being always supporting us. I think he's English as a second language. Very proud to be part of Warrior Trading. So appreciate that from Dennis, from Ernesto. Dennis, you guys can check these out if you'd like to. I do have featured success stories from some of our members. These are members who have made over $1 million, over 250,000, over 100,000, over 25,000, and there's some videos here. Anyway, so check those out if you'd like. All right, so now I'm going to go ahead and switch to doing some Q&A. So let me scroll up here on the chat feed. Let's see, and I'm just going to adjust my mic as I get closer to this computer. Okay, so there was a question about level 2 first. So that was the first one. So what's your opinion on level 2 price versus ladder? Okay, so I don't like level 2 in ladder form. I only like it in the standard form. So for those that aren't familiar, on level 2, and I'll just move. So, oops. So we've got level 2, and then we've got the ladder. So the ladder shows price, and then price going up and price going down. And traditional level 2 shows the bid and the offer, and the price is the last price. So the bid is here and the offer is here. So basically what the ladder does is it takes this and flips it like this. So you've got your current price, and then this is price going up. So this is the ask, and this is price going down, which is the bid. On the one hand, so most this is something that Thinkorswim does. I actually don't know too many other platforms that show it in the ladder. The main issue is that this is a histogram, so in color. So it just it's a gradient. Sorry, it's a gradient that just slowly fades. It's very hard for me with that to sort of differentiate the levels of the current price and where we have stacks. So I don't find this to be helpful, and I don't like using it. So I do not use it. I use level 2 in the standard form right here. So good question. Thanks for asking that. So doesn't using 10 cents offset eat away your potential profit loss ratio? So yeah, earlier in the class, I talked about how for my hotkeys, I'm using offsets of 10 cents. Now, here's the thing. I'm focusing on trading stocks that are moving quickly. So we've got like a $6 stock, for instance. It squeezes up, it pulls back right here. I'm getting in, let's say $6. Stop is $5.90 approximately. And on this, I'm looking for like a 10% return. So I'm looking for a move up to like $6.60. So $6.50, $6.60, something like that. That's 50 cents a share. So if I get in at $6 or I get filled at $6.10, does it cut into my profit loss ratio a little bit? It does, but it's not that bad for me. Now, if I lost a full 10 cents on my entry and I lost a full 10 cents on my exit, that would be not ideal. That doesn't usually happen on $6 stocks though. That might happen on like a $30, $40, $50 stock where you get that kind of slippage, but not usually on the cheap ones. Alternatively, if we were trading something that was priced at, $1.05, then 10 cents in and out slippage would be too much. You could manually adjust your hotkeys, but if you look at the depth of the market, you're actually looking at the level 2, you usually can get a pretty good sense of how much slippage you'll get just based on looking at the number of orders that are on either side. So if I see a lot of orders, I'm going to think, all right, I'm going to get more slippage. If I don't see as many, then I'm going to think, oh no, I should be all right with this. Okay, so good question though. Thank you. All right, so next question, let's see. Will I bring back the morning show? Yep, so answer that. No, I won't bring back the morning show, but I'll keep doing recaps and educational episodes on YouTube. Morning show not coming back to YouTube. Let's see. Thoughts on how much to hold in your account for capital gains tax? Well, so I have a whole nother episode specifically dedicated to that topic. I pay 0 income tax on my trading profits. How do I do that? I pay 0 income tax on my trading profits because I am trading in a retirement account. So I have an episode that I uploaded not that long ago here. Let's see. It's right there. So how traders legally pay 0 in taxes. So you could check that out if you'd like to. This is specifically about that topic. So it's a deep dive, but for those that are interested, you're welcome to check that out. Okay, so good question. All right, next one. Can I go over level 2 and price action? So this class, I'm keeping things higher level in this class just because I don't think it's realistic for me to get into the level of detail for each of these 9 steps that would be sort of required to like really go deep. So what I'm going to do is, let's see. If you go into my channel and you just search for videos, you could just search for level 2, for instance. How to use level 2 with zero experience. That's a good video. These are all good videos on how to use level 2. So check those out for a deep dive on level 2. Okay. So let's see. Next question. And yes, you could move to Puerto Rico to avoid capital gains tax for that person that was asking about that. It's Act 60, Act 20, Act 22, something like that. Anyways, there's a whole bunch of videos on that topic. I talked about it in that class. Okay, so when I could not afford to lose money, what did I do to discipline myself during that time? So when I was unable to afford loss and I had to be incredibly disciplined, this is what I did. Number one, I knew that if I lost after I'd funded that account again, that I wouldn't be able to I wouldn't be able to add more money. So like this was my last chance. Because the stakes were high, that had me like hyper vigilant. So what I would do is I had my strategy. I knew the 5 criteria for the stocks I wanted to trade. I had printed out my favorite chart patterns. So I had those printed out. I had them kind of all over my desk. I knew what I was looking for. And I said, I just have to be super hyper focused on this. Now, those of you guys, I'll actually give you a link right here if you want to download my micro pullback strategy PDF. I'm going to grab you a link to this because I think you might like this for those that are still tuned in. This is something you can print out and have on your desk. Let's see. So there's this one. Hang on, let me just find it because I think you're going to like this. Okay. So the micro pullback strategy PDF, you could print it out, have it on your desk. I'm going to put this in the chat feed right here, and I'll add it. I'll just make a note to myself to add it into the description of this video. So I printed out, I basically had the micro pullback strategy PDF, printed out. That was my system of like, this is how I'm going to be trading each day. This is what I'm going to be looking at. And so I had that ready to go. I had the examples of the charts printed and pinned to my wall. So I knew what I was looking for each day. And I said, I just have to wait. I just have to wait. Now, something I actually did, and I don't know if I'd recommend this, but I think I might have heard it somewhere and I thought it was a good idea. I can't remember. I put a tack in my shoe and I could feel it under my shoe and it was uncomfortable. And it was a reminder to only stay in the market for a very limited period of time because standing there was uncomfortable. I was doing a standing desk at the time. So I was like, this is gonna be uncomfortable, but this is just gonna be like a reminder. I had a rubber band around my wrist, snapped it. If I started getting a little frustrated, I was just trying to do everything I could. Anything I'd heard people had done. I was doing daily meditation. I was running a lot. I was exercising. As soon as I was done trading, I was going outside. I was painting the house. I was splitting firewood. So I gave myself a lot of structure, a lot of routine, and I did not let myself deviate. And what kept me motivated and kept me disciplined to do all of that, I set my mind to it because I knew other people were profitable as traders. I wanted this for myself. I knew to make it happen, I had to take it more seriously than I had ever taken it so far. So that for me was, that's what I ended up doing. Okay. So let's see. Offshore brokers. Yeah. So, right now, whether cash only accounts with a settlement date, T1 settlement, May 31st, 2024, that's a big change. So I think a lot of people are going to be using cash accounts instead of offshore. I'm not using level 3 data. I don't have access to it. I think only brokers have access to that. They would see stop orders. I don't see those orders. Okay, so looking for the next question. Can you upload simulator metrics to TraderView? Yes, you can. You can export your trades. So if you went into TraderView right here and you go to import trades, you can actually choose the Warrior Trading simulator right here. And you can import trades from our simulator. There you go. Sorry. So you can import trades from the simulator right there. So we've worked with them, so that's all set up. So you could do that if you wanted to, and that would be fine. And then you'd have everything imported. Yep, good question. And yeah, the audiobook, so let's see. We'll go back to videos here. So the audiobook is right here. It just uploaded this 3 days ago. So again, those of you guys who may have bought a copy, I appreciate you doing that. You get to listen with no interruptions. This has interruptions from ads and stuff like that, but hopefully it's valuable for those that want to save the $9.95. Okay, so psychology is way different when trading with real money, and that's true. So I think the value of trading in a simulator is that you want to do it for your first few weeks while you're trying to figure out whether or not this strategy is even viable. If you can't make money in a simulator, there's no point in putting real money on the line. But if you can make money in the sim, then it's like, okay, let's flip the switch and trade with real money. But yeah, only risk $1. Make the risk so tiny that the losses don't matter, but it's beginning to condition you to experience gains and losses and keep scaling it up from $1 to 2 to 5 to 6 to 8, etc. And the next thing you know, you're risking $100 on trades, but you've conditioned yourself to experience it so it doesn't feel like a big, a big challenge emotionally. Okay, so let's see. Thank you guys who are tuned in for this live class, by the way. I hope you've hit the thumbs up and subscribed. How many months should I show consistency and profit in a simulator before going live? I would say if you have 6 weeks of consistent profitability, a 6-week stretch of being green, that's pretty good to consider flipping the switch with small size and beginning to experience at that point the emotions that come with trading with real money. Okay. You have the stat that your most profitable trades are on stocks that are over 10% gain on the day. Is that 10% prior to you taking the first trade or based on the movement of the entire day? So that is based on the movement of the entire day. However, the over 10% is sort of a low threshold because in fact, most of the stocks I end up trading and making a lot of money on go up 40, 50, or 100% or more. So 10% is just like the minimum. At this point, I wouldn't look at a stock if it's not already up 10%. The only exception to that would be a continuation setup where it was up 200% yesterday and today it's not up anything, but it's holding yesterday's high. I would look at that for continuation. But aside from that, I would say focus on up 10%. Okay, let's see. So let me scroll down a little bit further. Get a couple more questions. So hang on one second. Okay. So I do host in-person classes from time to time, but I was doing them much more frequently before COVID, and I've only hosted 2 of them or 3 of them, 2 or 3 of them since then. So I mostly am teaching my classes online in both the recorded classes and then in the live sessions that I host. Do I ever chase a move? Yes, I will chase a move. So if we have a momentum stock, we have something that's clearly moving very quickly, what I'll do sometimes is I'll buy a micro pullback like that and ride, and that's something that I want to trade. So that's what I would say. I'm willing to trade it, but it's got to be moving. Okay. So why don't I have a Lamborghini? I mean, I've had nice cars. I just don't show them off. So, it's just, that's not really the type of person that I am. Okay. So let's see. What about market awareness? How important is general market conditions? So it's definitely true that that overall market is something to be aware of. Like, what's the overall market doing? Is the overall market tanking? Is the overall market moving higher? Let's see. So let me just grab this here for you. So what I usually will do is I'll look at the S&P 500. The IWM is the Russell index. And since I'm mostly trading small caps, some people would say I should look at the IWM, but I generally just look at the overall market, the S&P, just to get a perspective of like what are things looking like right now. So the last week we've been in a little bit of a drawdown, but overall the last 6 months have been really strong. So for me, if we are in like COVID, dropping 30%, like this was a crazy big drop and it happened really fast. The world, like, everything was on lockdown. It was crazy. Obviously, those are market conditions I'm aware of. The market rally, those are market conditions I'm aware of. This is a bear market from 2022. We rallied back up in 2023. So like I'm aware of all these things, but generally I do find that I trade better when there's a tailwind. So when the overall market is strong, I'll trade better. And when the market is not as strong, I find that trading is a little bit more sluggish. It's a little bit more difficult. Yet, I've still made money every year consistently from when I turn the corner, I've made money every year consistently. I haven't had a year after turning the corner where I was red, knock on wood. Even though we've had a bear market in 2022, I still made $750,000 or 800,000, something like that. It was a good year. I could see myself having a red year potentially, I guess, but because of my way of sort of being so focused on individual days and hitting base hits, I think that I'm reducing the risk of that happening quite a bit. So, I stay focused on, looking for those stocks that meet my criteria for being in play. So if we go back here, just to sort of reiterate, we've got the basic knowledge of trading stations, how to buy, sell, candlestick charts, market dynamics. But, once I get into risk management, I've got my system for finding the right stocks each day. I've been doing that every single day for more than a decade. I've got my system for entry indicators dialed in. I've got my system for exit indicators dialed in. So for me at this point, trading is very systematic. It's a system that I follow every single day. The hardest part is making sure I leave emotions at the door if the market is choppy and I don't let myself get frustrated. And that's something that I think we all work towards as traders. And hopefully I'm able to, give you some tips of things that have worked for me and inspire you to be a more disciplined trader. Because if you can be disciplined, if you can follow the rules, then you're setting yourself up really well for hopefully a longer career at this. So with that, I think I will end this broadcast. Thank you guys for being here, for tuning in. I hope I answered a lot of your questions. If I didn't, put it in the comments below because I'm always checking comments on my phone. I'm always answering them. So throw questions down there in the comments. And if you want to check out our 2-week trial for $20, there's going to be a link for that pinned to the top of the description and in the comments. There's also a link right now for the anniversary sale, although it is ending in 48 hours. So that's coming to an end. But check that out for those of you guys who are here now. The recommended reading, I hope you guys enjoy some of these books. Grab a copy of mine if you'd like, and hit that thumbs up, subscribe to the channel, and the micro pullback PDF, that's available to download as well. So you guys, I hope, got a lot out of this class. We packed a lot into what is about a little over 2.5 hours. So I hope this was a great class for you. Thank you for tuning in. I love being able to be here as your mentor, as your educator. My goal has always been to throw the ladder back down to help you guys make your way up. So if this is of any use at all, I hope you share it with some friends and spread the good word. All right. Thanks as always for tuning in. I'll remind you, trading is risky. My results aren't typical. Manage your risk. Take it slow. And I'll see you back here for the next upload real soon.